Hello everyone. Hi guys. How are you all? So I welcome you all in this final marathon. I am just going to give you a simple revision of all the important and repetitive topic of module D, because as you all know, module D is one of the most important module for all of you, right? So in this final marathon, I am going to give you first of all some module D important theory that is very repetitive in your examination, right? These are the topic which I am sure there will be questions in the examination from this particular theory. So I want to revise you all. So first half an hour, we are actually going to revise the complete module D important topics. And then the rest questions I will be discussing after the theory onwards, right? So in this final marathon, you are going to get all the important theory section of module D plus the most important MCQs from module A, B, C, and D. So everyone kindly just like and share the video to the maximum you can. And if you haven't subscribed this channel yet, please subscribe this channel and press the bell notification icon. So let's start discussing. First of all, let's talk about this capital market and stock exchange topic, which is unit 31. And as you all know, this is a very important topic for all of you. So in this chapter, first of all, there is very important what are the different type of capitals, which are different type of instrument or capital which are issued in the primary market. So in the primary market, you will get initial public offering, follow on public offering, right issue, and private placement, right? So when we are talking about the initial public offering, this is when there is an unlisted companies. These words are important. So when there is unlisted company, they are either making fresh issue of securities or already see when there is a very new company and they are going to launch their shares for the very first time in the market, that is actually called as initial public offering. So unlisted company going to make fresh issue of securities for the first time to the public, that is IPO. FPO, there is already listed company who has once raised money from IPO. Now they want to issue fresh securities to the public to raise more investment from the public. That is FPO. Then we have right issue. Now, right issue means already there is a listed company. They are again issue fresh securities to the existing shareholder, okay, not to the new or general public. They just want to raise money but from their existing shareholder. That is right issue. Private placement means then there is a company which identify a group of person and they are going to raise money from that identified group of person. That is called as private placement, okay. Now in this chapter, depositories are very important. So first of all, introduction of the depository. So when we are talking about depository, these are actually a system where the complete management, complete record is actually maintained in an electronic form. So ownership details, complete securities, and what who has been issued what securities, plus the complete ownership detail in the electronic form, these are recorded in the depositories. So if you want to register yourself as a depository, you should have a registration as a company under Companies Act 1956. You must register with SEBI under SEBI Act 1992. You must have approved yourself by the complete laws of the SEBI. You must obtain the certificate of commencement from the SEBI. You must render the service to depository participant. You should have an educate system and safeguard means you should have a proper management system so that you can just prevent from any type of record manipulation, right? Now depositories structure and functioning. So when we are talking about this depositories structure and functioning, so as a depository, you always have to render the services to the depository agent, okay. So as a depository, you are working as a principal, and then who is giving services to your customer, they are working as your agent, okay. Now there are two major type of depositories, NSDL and CDSL, very important for the exam point of view. So NSDL, they are established in 1996. CDSL, they are established in 1999. So NDSL, the National Securities Depository Limited, they are promoted by IDBI, UTI and NSC. CDSL, they are promoted by BSE and Leading Bank. So they both have headquarter in Mumbai. So NSDL, their account is actually started with IN followed by the 14-digit number, whereas CDSL, they are purely 16-digit numbers, right? When we are talking about the NSDL, primarily it is promoted by NSC, it is primarily promoted by BSC, both are regulated by SEBI. Okay. Now, method of IPO pricing, very important. So there is a fixed price method and book building process. In fixed price method, already the issuer company prefixes the prices of the share even before going to the public. Book building process, the price of the share is not actually determined. The investors just try to just they give a band that I am going to launch the share that range between 5 rupees to 50 rupees. They are giving you the upper and the lower limit band. And what is the exact price? This is as per the demand and supply of the market. Okay. Now, type of investor in the initial public offering. So we have these different type of investors in the initial public offering. Retail individual investor, those investor like the common you and me, whose total investment amount is not more than 2 lakh. Qualified institutional buyer, these are those who have expertise and knowledge in providing the amount or in providing the investment services to the public. Then we have the non-institutional investors, which are other than RRIs and QIBs. They are actually high net worth individual and large corporates who are investing in the capital market. Then we have the anchor investor. Now, the anchor investor has a minimum 10 crores in an initial public offering. Anchor investor, they actually invest minimum 10 crore in the initial public offering, right? So when we are talking about they have a lock-in period of 30 days, you should have the shares at least for 30 days before selling, right? So that are the anchor investor. Then very important allotment rules for IPO. So in the allotment rules for the IPO, we have the voluntary book building issue. So in this, the retail individual investor minimum 35% of the net offer. Non-institutional investor, for example, if 100 shares is to be issued, I'm just giving you a very simple example. If 100 shares to be issued, so in book building process, retail individual investor minimum 35% means 35 minimum 35 shares you need to give. Non-institutional investor minimum 15 shares you have to give here. And qualified institutional investor, max to max you can give 50 shares, not more than that. If there are 100 shares, you just assume it from 100. Then we have the compulsory book building issue. At least 75%, this point is very important. For example, 100 shares is going to be launched, so at least 75 share it need to be issued. Okay, it need to be issued. At least 75 share need to be issued to the qualified institutional buyer. If you are not going to issue at least 75%, 75 shares, then your complete amount is refunded. Non-institutional investor, not more than 15%, max 15 share. And retail individual investor, max 10 share. Okay. Then fixed priced issue for the retail individual investor, minimum 50% of the net offer, and the balance you can just give it to the individual investors beyond RRIs. Okay. Next, when we are talking about the green shoe option, so green shoe option is actually a price establishment or stabilization mechanism which is allowed in initial public offering. So when the share is going to launch in the market, so to avoid excess fluctuation in the prices, SEBI has allowed the green shoe option, in which the company is allowed to issue additional 15% of the original size of your offer if If the demand is very high, to stabilize the price, that is called as green shoe option. Then we have self-certified syndicate bank and ESMA. Self-certified syndicate bank, these are the authorized bank by SEBI for the initial public offering application, and they actually give services using ESMA application supported by blocked amount. In this, from the customer account, the amount is not deducted until they will get the delivery of the share. So as a customer, first you will get the delivery of the share. That much amount till then is blocked in your account. And when you get the delivery of the share, then afterwards, your account will be deducted by that amount. Okay. What are the eligibility for issuing the IPO? So net tangible asset should be at least 3 crore in the past 3 years. Net operating profit at least 15 crore in the past 3 years. And net worth at least 1 crore in the past 3 years. Okay, now alternative route, if you have not achieved all these three target, then very simple. If we talk about the initial public offering, if you are going to have the IPO, you should do it with the book building process, and at least 75% of your net offer should be reserved for the qualified institutional buyer. Then for NSE listing criteria, your post-issue paid-up capital should be at least 10 crore and your market capitalization should be at least 25 crore. So these are most important part for the capital market. Okay. Now let's talk about the money market, some important parts. First of all, the call money, notice money and term money. Very important is the time period. Call money, it is actually issued for a period of 1 day. Notice money, it is issued for a period of between 2 to 14 days. And term money, it is issued for a period of 15 days to 1 year. Time period is very important. Okay. Treasury bill, the time period is 91 days, 182 days, and 364 days. It is always issued at discount and redeemed at face value. Okay. Who can invest? Anyone can invest. Okay. Individual, companies, bank, institution, trust, state government, retail investors, NRIs, OCIs, FPIs, anyone can invest in the treasury bill. Now, in the treasury bill, you can have the investment through the auction method, which is conducted by RBI with the platform which is called as e-Kuber system. And the auction is uniform price method and multiple price method. Now, treasury bill, these are issued at minimum of 10,000 rupees and you can issue it in the multiple of 10,000. Okay. Now, certificate of deposit, it is issued again at discounted price and redeemed at par. Most important thing is the time period, range between 7 days to 1 year. Minimum amount you can invest is 5 lakh and in multiples of 5 lakh. Commercial paper, commercial paper, simply when we are talking about the commercial paper, minimum credit rating is A3. Okay, you should, if you want to issue the commercial paper, you should obtain the minimum credit rating of A3, okay, which is prescribed by the SEBI. The commercial paper is again issued for minimum of 7 days and maximum it is issued for a period of 1 year. Okay, then we have the bill rediscounting scheme. So it is discounting of, again discounting of the discounting bills or discounted bill. So bank, you know that in the first step, bank has obtained a lot of bills which the bank discount to the seller. Bank give immediate money to the seller and receive that particular discounted bill. Okay. Now, bank has already a lot of discounted bill which is still due for the recovery. Now, if bank want money for themselves, they actually use that discounted bill to obtain investment from the other party. So they in turn rediscount their discounted bill. Okay, so they said that you just give me the immediate money. Okay, and once I will recover my complete amount from the seller, I will return your amount. That is called as bill rediscounting scheme. Already the bill which is once discounted is rediscounted again with the bank. Minimum time period is set 15 days and maximum time period is 90 days. Okay. Now, next is fixed income market, debt and bond market. This is unit 32. In this chapter, the most important thing is the four bond theorem. very important for all of you, the four bond theorem. The theorem one is the price of the bond, which is inversely related to the change in the interest rate. So as the market interest rate increase, bond price decrease, and as the market interest rate decrease, bond price increase, and vice versa. Okay. Theorem second says what? Theorem seconds. So it says that when there is a change in the market interest rate by the same proportion, if the market interest rate is increased and if the market interest rate is decreased by the same proportion, like for example, assume it is changed by 1% here. So as you all know, market interest rate decrease, bond price increase. Market interest rate increase, bond price decrease. So always remember, bond price increase is always more than bond price decrease. Third is, longer the maturity, higher will be its price sensitivity. It means that if two bonds are there, bond A and B, and bond A mature in 7 years and bond B mature in 5 years, always remember, bond A A will have higher price sensitivity. It will be very sensitive towards the market interest rate. The price change will be very sensitive if we compare it to B. Then if two bonds, there are two bonds for example, and both have the same maturity like 5 year, both bond have the same maturity like 5 year. Always remember, bond A and B, if they have same maturity, then you have to look the coupon rate. The bond will, the lower coupon rate will be more price sensitive than with the higher coupon rate. Like for example, bond A has 5% coupon rate and bond B has 4% coupon rate. So bond B will be more price sensitive if we compare it to bond A. These are the bond theorem which is very important for your examination, right? Next question, primary dealer. These are very repetitive topic. Primary dealer, these are those entities which are registered with the Reserve Bank of India. These have the work to obtain government securities directly from Reserve Bank of India and then reselling in the market. So these are those entities, primary dealer, which obtain government securities directly from RBI. Then it aims to resell it in the market. So that is called as primary dealer. Okay, so primary dealer, this has been introduced in year 1995. Now, what are the conditions for the primary dealer? First condition is, if you are a scheduled commercial bank subsidiary or all India financial institution, you can do the function of primary dealer. If you are a subsidiary or joint venture, you can do the function of primary dealer. If you are a company, again you can do the function of primary dealer. And if you are an NBFC and you want to do the function of primary dealer, you should register yourself as an NBFC, means you have the work experience of at least 1 year before submitting the application for the primary dealer. Okay. Now, RBI Retail Direct Scheme, RDS. So RBI Retail Direct Scheme, in order to deepening the government securities, okay, RBI has actually launched the RBI Retail Direct Scheme. So it is actually for what? To just increase the investor space in the government securities market. So you and I, we normal investors also get the chance to invest in the government securities, for which RBI has actually launched the RBI Retail Direct Scheme. Okay. Now, when we are talking about the eligible securities, treasury bill, dated securities, sovereign gold bond, state development bonds, all are eligible for the RBI Retail Direct Scheme. Always remember, in the RBI Retail Direct Scheme, you first have to open the Retail Direct account. Then you have the access of the primary market, okay, and you can trade in the secondary market also via the platform which is called as NDSOM. Okay. Now, who can become the RDS eligibility? Anyone retail investor, you can just register yourself under this scheme, or you can open a RDG account if you have a proper saving account, PAN, officially valid document, valid email ID, and registered mobile number. Then you can open the RDG account and you can register yourself in the RBI Retail Direct Scheme. Okay. Now, next is the derivative. Now, what are the most important parts in the derivative? So, I am just going to give you the most important thing which are important for your examination, right? So, in this chapter, two important type of derivatives are important: exchange trade market and over the counter market. The main difference between exchange trade market and over the market or over the counter market is the standardization. Exchange trade market, these are the standardized form of contract, okay, whereas over the counter market, these are not a standardized form. These are actually not present in the standardized format, right? Exchange trade market derivative, these are not customed according to the need of the customer. These are listed in the recognized stock exchange at a proper fixed price, at a fixed asset. If you want to purchase it, you have to purchase it in the same way it is registered. Whereas over the counter derivative, these are not standardized. These are actually tailored according to the needs and wants of the parties. So that is the main difference between exchange trade market and over the counter market. Option, very important part of this chapter. So if you are purchasing the option derivative, understand this point. If you are purchasing the option derivative, it means that you have the right to decide whether to buy or not buy a specific quantity of goods at the specific price. So you will get the right to decide. There is no obligation to you. For example, if I have purchased an option, it means that I get the right to decide whether I want to purchase or not to purchase the asset at the specific price at the specific date. It is up to me. If I have undertaken any option, then the counterparty has to follow my rule. So that is actually the plus point of the option. It don't give you the obligation to buy or sell. It only gives you the right to buy or to sell, or not to buy or not to sell, right? That is option. So there are two type of option: American and European option. So when we are talking about the American option means here you can decide any time from the time of purchase till the expiry date, or on the expiry date you can purchase it anytime. Okay. Whereas European option, you have the right to decide from the date of the expiry. You have actually getting the right to decide the whether you want to buy or not to buy only at the time of the expiry. So if you have the right to decide, like for example, I have purchased this today, the American option means from today onward till the expiry day, I can decide any time. Whereas in the European option, it gives the right to decide on the day of expiry only. Okay. Now we have call option and we have the put option. So call option give the buyer the right to decide on the buying decision, whether they want to buy the asset or not to buy the asset. And if they have decided anything, for example, they have decided that yes, we want to buy, then the counterparty has to sell it. It is obligatory on that person. Put option give you the right to decide whether to sell or not to sell. If you have decided that okay, I want to sell, then the counterparty has to buy. It is the obligation on that person. So that is call and put option. Okay. So this is important. Now in this chapter, very important is factoring, forfeiting differences, and what is trend. Simple, if we talk about the process of factoring, very simple, that seller sells goods to buyer. Okay. Now, seller when selling goods to the buyer, and buyer promised to pay here. Okay. So in this condition, seller has a bill of exchange. But for example, assume seller want immediate money. Okay. Assume seller want immediate money. So seller goes to the factor. submitted the invoice there, and factor give the money here to the seller, like 70 to 80% money of the invoice value as an immediate payment. Now when the time period comes, factors just request the payment from the buyer, and the buyer has to make payment here. Okay, when the factor received the 100% payment, after receiving 100% payment, they just deducted their fees and commission and written rest of the amount of the seller. That is the process of factoring. Clear? With recourse factoring and without recourse factoring. Very important. With the recourse factoring and without recourse factoring, these are very important for all of you. Okay. So with recourse factoring means when factor here requested the payment from the buyer, and for example, the buyer defaults on the payment here, for example, then in this case, the factor, if it is with the recourse factoring, means the factor has this right that they can demand the compensation or the payment from the seller. Factor can say to the seller that I have given you the immediate money, but your bill of exchange is default now. Buyer has not paid the amount, so now you have to return the complete amount to me. That is called as with recourse factoring. Now, without recourse factoring means the seller is saying that no, seller is saying that uh, if you are able to recover the money from the buyer, well and good. But if you are not able to recover the money from the buyer, then I am not going to pay you anything. Means in this without recourse factoring, the factor has to absorb the complete loss by themselves. They cannot demand the repayment from the seller. That is called as without recourse factoring. Okay. Now, what is forfeiting? Forfeiting sounds very similar to the factoring. It is again when the forfeiter, means the bank and financial institution, give immediate money to the seller in exchange of the bill of exchange. But ma'am, what is the difference between forfeiting and factoring? First difference between forfeiting and factoring is forfeiting is done without recourse only, whereas factoring is done with as well as without recourse, both. Forfeiting is done for long term receivables who have a long maturity time period. Forfeiting, they are actually done for short term receivables. Forfeiting, they are actually done for short term receivables. Forfeiting, they are done for those invoices usually who have big amounts. Usually the amount of the invoices are big, started from $250,000. Whereas forfeiting, these are usually done for small amount invoices. Okay. The bank and financial institution in forfeiting, it is called as forfeiter. The bank or the institution in factoring, they are called as the factor. In forfeiting, the forfeiter give 100% of the invoice value to the creditor as an immediate payment, whereas in forfeiting, the forfeit the sorry in factoring, the factor is giving approximately 7 to 90% of the payment as an immediate payment to the seller. Clear? So this is the difference between factoring and forfeiting, which already is written here. One more difference: forfeiting is done for international transaction, whereas factoring, it can be done for international as well as domestic transaction. Okay, so this is the complete difference which is written between the factoring and forfeiting. Okay, now what is a trade? Trade receivable discounting system. So TREDS is our online platform for the discounting of the bill, which is held by MSME sellers. So there can be the seller who should be only micro, small and medium enterprises. So these are the seller, they can just register their invoices in this trade platform. Buyer has to sign in and accept that invoice. It means that buyer just accepted that, okay, I am going to pay for this bill of exchange after so and so date. When the buyer has accepted that bill of exchange, the bank and financial institution, whoever are interested in discounting the bill of MSME, they start bidding. Some says that I will give you 70% value. Some says that going to give you 80% of the value. Some says that I'm just deducting 2% discount. Some says that I'm deducting 5% discount. So now MSME get a lot of option here. So now they actually decide what? Now they actually want to decide on the best bidding. The best offer they can get, they accept that. Once the MSME accept that, the immediate money is deducted from the bank and financial institution account and credited to the MSME. And once the time period comes, the buyer's account is deducted with the same money and credited it to the bank and financial institution account. And always remember, whatever the transaction which are done in the trade platform, this is always done without recourse. Okay. Now, who can become the trade, or who can start the trade platform? Anyone. You should have a minimum capital of 25 crore. Foreign investments are allowed here, but entities, they are actually required to hold that entities other than the promoter, they are not permitted to hold more than 10% of the equities in the. Okay, so these are the eligibility criteria. So this is the important, all the important point which is related to factoring, forfeiting, and rights. Okay, now when we are talking about the lease finance and hire purchase, now let's just talk about the difference, which is very important here. So, type of leasing, two type of leasing, very important, very repetitive. Finance lease means when the asset is given for almost the whole economic life of that asset. Means the lessee has the right to use the asset for a very long period of time, which is covering almost the whole life of that asset. Whereas in operating lease, this is a short-term lease. When I have given my car on a lease to one person for a period of 10 years, that is finance lease. Operating lease, I am giving my car on a lease to one person for 6 months, to another person for 6 months, to another person for 6 months. That is the operating lease. In finance lease, the lessee has to bear the risk of obsolescence. Obsolescence means the risk of outdated. Whereas in operating lease, the lessor has to bear this risk of outdated. In finance lease, the lessee has to give all the depreciation and maintenance charges. Whereas in operating lease, because it is for a shorter period of time, so these are the expenses which are borne by the lessor. Clear? Done? So in the finance lease, in the end, there is one option which is given by the lessor to lessee, that you have used this for a very long time. So if you want to purchase this asset, you can purchase this asset from me. This is the option of purchasing which is given at the end of the finance lease. But in operating lease, no such option is given. Clear? Done. Now, what is the difference between lease finance and hire purchase? Very simple. What is a lease finance? So, when the lessor, means the owner of the asset, is giving leasee the right to use that asset for a specific period of time, that is called as leasing. Hire purchase is another way of acquiring the asset without paying the full price of that asset. Instead of paying the full price, the purchasing price is actually distributed into equal amount, which is paid on a monthly or quarterly or whatever the period which is decided. That is called as hire purchase. So that is the difference between lease finance and hire purchase. This is the important topic, a repetitive topic, which is very important for your examination, right? Now, credit rating and credit score. Let's talk about just a difference between these two. Credit rating. Credit rating are given by credit rating agencies, while credit score, these are given by credit information companies. Credit rating, these are the mixture of alpha plus numbers. Whereas credit score, these are actually only numbers which range between 300 to 900. 300 being worst, 900 being best. Credit rating, it is given to large corporates and governments, whereas credit score, it is given to the individual and small business entities. Okay, so this is only the most important point. Now let's talk about the last thing, that is a mutual fund. Okay, so in a mutual fund, we have the regulator, first of all, who is regulating the mutual fund market. So mutual fund market is actually regulated by SEBI. Okay, then we have different categories of the mutual fund, which is very important. So equity, debt, hybrid, solution oriented, and other scheme. Okay, now in the equity scheme, we have different types of schemes of mutual fund, like multi-cap. In this, you can invest in large, mid, and small cap companies. Okay. Okay, you can invest large, mid, and in the small cap companies, and you should be invested minimum 65% of your total asset in equity and equity related instrument. Large cap, you are only focuses on the big players of the market, like Reliance and the big players. Okay, and you should be investing at least 80% of the total money which you have collected from the investor, especially in the equity and equity related instrument. Then we have large and mid cap. You can have a combination of both. You can invest your money in large as well as mid cap. 35% minimum you can invest in the mid cap stock, 35% you can invest in the large cap stock minimum. Mid cap, you are focusing only on the medium capital companies, right? Minimum 65% you have to invest in the equity and equity related instrument of mid cap companies. Then we have small capital fund, which are going to focuses only on the small capital stocks. Okay, minimum 65% of the total asset you have to invest in the small cap. Okay, value fund, it means that you are focusing that your prices of the unit should be low. So you should be investing in the companies which have a good value, but it is not very expensive, so that your price per unit should be a less thing. Contra fund, you have to actually go against whatever the trend which is in the market. Like for example, if the market is growing and everyone is investing, you have to contradict in contra fund, means you have to sell when everyone is buying. That is contra fund. Focus fund, you can invest in maximum 30 stock, which can be a small, mid, or multi cap. Okay, there is no obligation on that, but maximum 30 stock, not more than that. Then sectoral means you have to choose a theme and you have to invest in that proper theme. Like for example, for the mutual fund money, I'm just going to invest in the IT, or we are going to invest only in the car, etc. So that is thematic, sectoral. Then we have equally linked saving scheme, which have a lock-in period of 3 years. And if you are going to invest in this ELSS scheme, then your minimum 80% of the total asset is actually invested in the equity and equity related asset. And you will get the tax benefit under the Income Tax Act also. Okay. Now, in the debt scheme, you have to remember the date of maturity. In overnight fund, the money is invested in that financial instrument which have maturity period of 1 day. Liquid fund, 91 days. Ultra short fund, between 3 months to 6 months. Low duration fund, between 6 months to 12 months. Money market fund is between up to 1 year. Short duration fund, between 1 year to 3 years. Medium, between 1 to 4, basically from 3 to 4, but 1 to 4 all comes under medium. Medium to long term, it is ranging between 4 to 7 year. Okay, but it covers a wide variety, all between 1 to 7 year. And long duration fund, which have a maturity period of more than 7 year. Okay. Retirement fund, it has a lock-in period of either 5 year or till the age of maturity, whichever is earlier. Children fund, retirement fund, 5 year lock-in period or till the age of retirement, whichever is earlier. Children fund, these have a lock-in period of 5 year or till the age of the maturity, whichever is earlier. Then we have some more type of mutual fund, like open-ended fund. which is available for subscription anytime. You can anytime purchase, anytime sell at the net asset value. Close-ended fund, you usually have to purchase it at the time of new fund offer, and then it has a specific time period, and after that specific time period you will get the maturity value. Interval fund, it is a mixture, means it is like a close-ended which have a proper maturity period, but it is open for subscription in different interval. Like for example, it is open for interval from here to here. So you can just purchase and sell in this transactional window, and between two transactional windows, there should be at least 15 days gap. Then we have active and passive fund. Active fund means where fund manager are deliberately taking the decision that how to invest the money into different funds. Okay. Passive fund, where they mimic the style whatever is present in the economy, like Nifty 50. So they are going to invest only in that 50 companies which are the part of Nifty. Okay. Then we have growth and dividend scheme. In the growth scheme, there is no periodical payout. Okay, the money, whatever the money which is actually earned is reinvested again into that scheme. No periodical payout. Whereas in dividend scheme, we have the annual periodic payout. Okay, you will get a proper periodic payout in the dividend scheme. Clear? So this is, guys, the whole important things which I have to give you as a last minute revision, right? So these are some of the very repetitive things which I've seen in the examination. So you are going to get questions from these repetitive topics. Now from here onwards, I will be having some very good MCQs. Okay. Meanwhile, in the mid also you will get the committees list, you will get the priority sector lending targets also. So very important MCQs. Please watch these MCQs very carefully. These are very beneficial for your examination. Very repetitive topic. So go and watch. And please like and share the video to the maximum you can. Thank you so much. Thank you. So this is modules B topic, and you know that module B is very conceptual and very important for all of you. So let us discuss some of the important things related to budget. First of all, the annual budget of the country, it is actually called as what? The annual budget of the country, it is called as the union budget, and it is presented by union finance minister, and usually it was earlier presented in the last working day of February, but now onwards it has been presented from 1st of February. And according to article 112, the union budget of the year is also called as the annual financial statement. Yeah. Now, in the budget, first of all, I want to tell you that the complete budget, for discussion of the budget, the complete budget is actually divided into two parts. We have to discuss the budget in two parts. Income, which is also called as receipts. Income, the official word for income is receipts. And then we have the expenditure. So in the budget, we have these two things, income and expenditure. So income, whatever the sources of income for the budget are, whatever the sources of income, that income are actually divided into two parts. These incomes are actually divided into two parts. We have revenue income and we have capital income. Now, what is the difference between, or what is the meaning of revenue and capital income? First of all, let's talk about the capital income. What is a capital income? So capital income means any those income of the government, any those income which either increases the financial liability, means from that income either the burden of the government is increasing, financial liability is increasing, or the asset of the government is reducing. For example, the government is borrowing loans from Reserve Bank of India or from, say, International Monetary Fund. Okay, different type of loans. For example, there are different type of disinvestments. Disinvestment means the government has sold their shares, investments, and receiving the money. Okay. Recovery of the loan. Okay. Recovery of the loan. These are all the parts of the capital, or you can say capital receipts. Whereas revenue receipt is saying that neither the financial liability of the government is increasing nor the asset is decreasing. Any those income which neither increases the financial liabilities of the government nor reduces the asset of the government. Okay, now we have different type of revenue income, like for example taxes. All type of taxes are revenue income. Fees, fines, okay, then we have the commissions. Okay, these are all the part of the revenue income, because it doesn't either creates the financial burden, it doesn't increase the financial liabilities, nor it reduces the asset. Okay, now whatever the sources of the revenue income are, whatever the sources, this is also divided into two parts. Okay, one is called as tax and another one is called as non-tax. Okay, non-tax like fees, fines, commissions, railways from income, or profits from the public sector undertakings, these are all the revenue, non-tax revenue. Taxes like income tax, corporate tax, GST, excise duty, these are all the source of taxes. Okay. Now we know that taxes are also of two type: direct taxes and indirect taxes, right? So direct taxes means, like for example, income tax. This is the form of direct tax. Corporate tax, this is a direct tax. Indirect taxes, like we have GST, goods and service tax. Okay, so this is the income portion, that we have the revenue income and we have capital income. Now revenue income, where neither the financial liability is increasing nor the asset is decreasing, whereas the capital income, either the financial liability is increasing or the asset is decreasing. Okay, now when we are talking about the expenditure portion here, now again we have two types of expenditure, everyone. Okay, so we have two types of expenditure. First is called as revenue expenditure, same, and another one is called as capital expenditure. We have revenue expenditure and we have capital expenditure. Now, what is a capital expenditure? First of all, see, opposite of capital income comes in the capital expenditure. The opposite of capital income, it is coming in the capital expenditure. Now, what is a capital expenditure? Capital expenditure says that any expenditure of the government, see, government is spending somewhere, any expenditure of the government, which either reduces the financial liability, any expenditure which either reduces the financial liabilities of the government or increasing the asset of the government, that is called as a revenue expenditure. Either the spending is done for the creation of any asset, or the spending is done for reducing the liabilities of the government, that is called as the revenue capital expenditure. Now, revenue expenditure says that neither the financial liability is decreasing nor the asset is increasing. Now, this is the first difference. Usually, capital expenditure are long-term expenditure, whereas revenue expenditure are recurring short-term expenditure, which is done for a period of 1 year. Okay. Now, capital expenditure, if we talk about the capital expenditure, these are non-recurring in nature because these are for long term, so they don't need to be repeated again and again. Whereas revenue expenditure, these are considered as the recurring nature expenditure, means these are repetitive expenditure. These are repeated on an yearly basis, on a monthly basis. Okay. Capital expenditure usually are developmental in nature, okay, whereas revenue expenditure are non-developmental in nature. So that is the difference between revenue income and capital expenditure and revenue expenditure. Now, if we talk about some examples, simply, if the spending is done in the infrastructure, any type of infrastructure, it create assets, developmental in nature. Technology, it's create asset, developmental in nature. Or you can say repayment of the loan. These are all considered as the capital expenditure, right? Whereas if we talk about the revenue expenditure, you can say revenue expenditure, like for example, the subsidies which are given by the government. Okay, that is revenue expenditure. Or for example, the expenditure or expenditure which are done on giving any type of pension, okay, or salaries. Okay, so these are all considered as the revenue expenditure. Clear? So that is a very important part of the budget. So we have in a budget income and expenditure. We have two types of income: revenue income and capital income. Okay, now the question can be asked, like for example, the four income are given. You have to identify which of the following is not a capital income, or which of the following is a capital income, or which of the following is not a revenue income, or which of the following is a revenue income. These type of questions are very common in the budget. Same with the expenditure. Four options are given. You have to identify which of the following is the capital or revenue expenditure, or not a capital or not a revenue expenditure, right? Common question: according to which article the budget word is replaced by annual financial statement? It is Article 112. So these are simple questions that can be asked from this budget chapter, right? So if we talk about in budget, in this income and expenditure, we have three scenarios also. So there are three situations of income and expenditure. Okay. So if there are income and if there are expenditure, so we have three situations of income and expenditure. Now, what are these three situations? First is called as the surplus budget. Now, what is surplus budget? Surplus budget means income is more than expenditure. Now, second one is called as the balanced budget. Now, balanced budget is what? Income is equal to expenditure. And third is called as the deficit budget. Now, what is deficit budget? Deficit says that expenditure is more than income. Okay, so these are the three types of budget: surplus, balanced, and deficit. In surplus, you have more income. In balanced, we have both are equal, and deficit means expenditure is more than income. So usually the underdeveloped economies, whatever the underdeveloped economies are, they are actually having the surplus budget. Usually the developed economies, okay, the developed economies has balanced budget. And usually the developing economies, so whoever are the developing economies, they are having the deficit budget. Okay, now in this deficit we have different concepts also. Now this is also very important. The questions are asked by the examiner, that deficit situations. So we have these different deficit concepts. First is called as the revenue deficit. Now revenue deficit simply revenue expenditure minus revenue income. Revenue deficit means revenue expenditure minus revenue income. Now, what is effective revenue deficit? Effective revenue deficit means whatever the revenue deficit are, revenue deficit minus grant in aids for creation. Okay. Fiscal deficit. Fiscal deficit means total expenditure minus total income. Now, here In income, external grants or loans are excluded. Okay, so whatever the loan the government has borrowed from international market, that loans are excluded. When that excluding loan, whatever the income are minus the total expenditure, that is called as fiscal deficit. Okay, now what is the primary deficit? Primary deficit is fiscal deficit minus interest payment. So these all deficit concept you need to learn, everyone. These are the all deficit concept we need to learn. Clear, everyone? Done. So this is simple. This is the budget topic, okay, which I haven't taken in the capsule batch. So this topic I have explained here, everyone. Now it's the time to start the question, everyone. If you have any doubt till here, you are free to ask your doubt. Any doubt till here, if you have, please feel free to ask your doubt or just quickly give me a thumbs up, whoever are present in the class. Everyone, I want a thumbs up. And then we will start the questions, practice questions, everyone, you guys. Sorry, just quickly give me a thumbs up, okay, everyone, you guys. And then we start the practice questions. Can we start the practice question, guys? Okay, so let's start discussing the practice question with the very first question. Now, in the MCQs multiple choice question, we are taking A plus B plus C plus D. Okay, Kamal. All the 4 modules questions I'm going to cover in today's session. Okay, so let's start discussing. Okay, first question. Which of the following statement about the difference between bank rate and marginal standing facility is incorrect? Now, we have to choose the incorrect statement, everyone. Okay. First, bank rate is used for long-term lending, whereas MSF is for overnight borrowing. Bank rate requires collateral, while marginal standing facility loans are granted without any security. Now, MSF is generally higher than the bank rate to discourage the frequent use. Now, the objective of bank rate is to manage long-term credit supply, while MSF helps to meet the bank emergencies short-term liquidity needs. So we need to answer which of the following is the correct difference between bank rate and MSF. Everyone, kindly please start answering this question. So if we talk about the correct answer, we have to choose the incorrect statement here. Everyone, please start answering the question. So here Tanya is saying B, bank rate requires collateral, whereas MSF loans are granted without any security. And everyone else, Sunil is also saying B, Harsh is also saying B. So if we talk about the correct answer, yes, see, bank rate, these are long-term lending, while MSF is given for overtime loans, right? So for 24 hours, marginal standing facility, the loan is given for the overnight liquidity needs, okay? Second, bank rate requires collateral. Now, this is incorrect. Perfect, everyone. Why? Because see, bank rate, this can be lent without any collateral. Whereas when we are talking about loan in the MSF marginal standing facility, it should be granted with the security. So obviously, if you talk about the correct answer, B is the correct answer. And this is the difference between the bank rate and MSF. Very important. So these are some of the concept which I am taking in the marathons also to just give you the last minute revision. So bank rate is that rate in which RBI is lending loan to the commercial bank, and that loan is for a longer period of time, long term loan. And for lending loans in the bank rate, it can be raised, means the commercial bank can raise loan without pledging the securities. Whereas MSF, marginal standing facility, is actually a way in which the Reserve Bank of India is giving overnight liquidity funds or loans to the commercial bank. And here in the loan, always remember the pledging of the security is compulsion or compulsory. Clear? Everyone? Done? Now, next question. We have 3 statement written here. We have to choose which of the following is the correct statement. Now, In the organized sector, the job terms are well defined and employees are eligible for social security's benefit. Second, the unorganized sector include all the workers who are self-employed and receive social security benefit from the government. According to NCEUS, the unorganized sector includes all the incorporated enterprises with fewer than 10 workers. Now we have to choose the correct statement here. Everyone kindly just please answer this question. We have to choose the correct statement here. Everyone please answer this question. So the correct answer, we have to choose the correct statement here. Everyone, we have to choose the correct statement here. So the correct answer is Harsh, Kamal, Sunil, Tanya, and everyone. Kindly please, everyone, just like and share the video to the maximum you can. Everyone, start answering the question. We have three statements and we have to choose the correct statement here. Everyone. So these are all the questions which are very important for your last minute revision. So all of you are saying A is the correct answer, only one. Now see, in an organized sector, the job terms are well defined and employees are eligible for social security benefit. Correct. The unorganized sector includes all workers who are self-employed and receive social security benefit from the government. No, unorganized sector doesn't receive any social security benefit from the government. According to this NCEUS, the unorganized sector includes all the incorporated enterprises. No, the unorganized sector actually comprises of all the unincorporated private employees. Okay, so the definition which is given by NCEUS is the unorganized sector includes all the unincorporated private employees. So if we talk about the correct answer, yes, only one is the correct statement, rest two are the wrong. Now consider the following statement about the regulation of NBFCs in India. Statement 1. In 1992, the Reserve Bank of India formed a committee headed by Mr. A.C. Shah to suggest the measures for the regulation of NBFCs. Based on the Shah Committee's recommendation, significant amendments were made to Reserve Bank of India Act in January 1997, especially to Chapter 3rd B, 3rd C, and 5th. Statement third, the amendment aimed solely at increasing profit of non-banking financial companies by allowing them more operational freedom. Which of the following statement is correct? Non-banking financial companies. Again, everything is important here because the committee is important for NBFCs and everything is important. Kindly please answer this question. Non-banking financial companies. Which of the following statement are correct here? Harsh, Sunil, Kamal, and everyone who are watching this session, start answering the question, everyone. And kindly please like and share the video to the maximum you can, everyone. Please answer this question, guys. Consider the following statement regarding the non-banking financial companies in India, everyone. So Tanya is saying C is the correct answer. Only first and third are the correct statements. Second is wrong. And everyone else, please answer this question. So Tanya, only one answer is here. Tanya. And everyone else, kindly please answer this question. Sunil is also saying the same answer, C, and everyone else. Please start answering this question. I want an answer from each and every one of you. First, this is the AC Shah Committee, which suggests the measure for the effective regulation of non-banking financial companies. That is perfectly correct statement. There is nothing wrong in the first statement. Second, based on the Shah Committee's recommendation, significant amendments were made to Reserve Bank of India Act in January 1997 and especially to the chapter 3rd B, 3rd C and 5th. That is also correct. Now, amendments solely aimed at increasing the profit of NBFCs by allowing them more operational freedom. No, the amendments were regarding the regulation of non-banking financial companies. how to regulate, how to supervise the non-banking financial company, how to give the customer protection for the non-banking financial company. These were not related for enhancing the profit, right? So statement third is wrong. If we talk about the correct statement here, yes, the statement one and second, these are the correct answer. Okay. Okay, you guys, done. A is the correct answer. Any doubt? If you have any doubt, please ask. Everyone. Done. Important question. See, NBFCs are very important for all of you. Everyone who are watching this session, kindly please like and share the video to the maximum you can. This is very important for you all to just please like and share the video to the maximum you can. Okay. Now good. Next question. Match the 5-year plans with their key objective. Now we have to match the 5-year plans with their key objective. First 5-year plan, second 5-year plan, third and fifth. And these are the key objectives which are written. Now one question expects from the 5-year plan. Yes, you have to expect one question from the 5-year plan. And I have given you in the capsule batch the list of year 5-year plans and their main objective. Okay, these three things are very important for the 5-year plan. So tell me the correct answer here. Sorry. Tell me the correct answer here, everyone. So the correct answer is what? You have to answer this question, guys. Please answer this question. Everyone. Okay, Tanya and Harsh, they are saying A is the correct answer, and everyone else, you guys, please answer this question. So the correct answer is what? Okay. So if we talk about the correct answer first, the first 5-year plan, okay, first 5-year plan, date of the first 5-year plan, 1951 to 1956, focusing more on agriculture and irrigation. Second 5-year plan, 1956 to 61, focuses on industrial growth and heavy objective. Third 5-year plan, it is from 1961 to 1966, focuses on self-reliance and poverty reduction. Fifth 5-year plan. Now, fifth 5-year plan, 1966 to 69, 3 years planning holiday. 1969 to 74 was the fourth 5-year plan, and fifth 5-year plan is from 1974 to 1979, and it focuses on the removal of poverty, right? So these were the 5-year plans. Now, in the 5-year plan, you have to remember the planning holidays. Now, planning holidays, very, very important. Okay, maybe the question can be asked. So there were three planning holiday. First planning holiday from 1966 to 69 of 3 years. Second planning holiday from 1979 to 1980 of 1 year. Then third planning holidays from 1990 to 1992 of 2 year, right? So there were six planning holiday in total, right? And here it is also considered as the annual plans, okay? And this was also termed as the annual plan. So if we talk about the correct answer, first is B, second is A, third is C, and fourth is D. Yes, A is the correct answer. Everyone done? Clear? Yes, everyone. Can we move to the next question? Okay. Next question. Narrow banking in the concept of non-banking financial companies refers to what? What is a narrow banking, everyone? Providing only agricultural loan, investing funds primarily in the safe and liquid asset, offering only long-term loans to industries, focusing on foreign exchange transactions. So we have to choose the correct answer here, everyone. We have to choose the correct answer here. Narrow banking. Narrow banking in context of non-banking financial companies refers to what? Harsh, Kamal, Sunil, Tanya, everyone start answering the question. Narrow banking. If we talk about the correct answer, what is a narrow banking concept? So it is D, focusing on the foreign exchange transaction. Ranveer is saying D. Okay, Kamal is saying B, investing primarily in the safe and liquid funds asset. Narrow banking. Now, narrow banking has been recommended in which of the following committees? If we talk about the committee, which committee has given the recommendation of narrow banking? This can also be the question which can be asked in the examination, everyone. Tell me both the answer. Okay. So narrow banking providing only agriculture loan, no. Investing fund in the primarily and safe liquid asset, yes. B is the correct answer. Now tell me which committee has recommended the narrow banking concepts. Narrow banking, the recommendation has been given by which committee? Everyone start answering the question. Narrow banking. Which committee has given the recommendation of narrow banking, everyone? So if we talk about the correct answer, so Narasimha committee, I guess phase second of Narasimha committee give you the recommendation of narrow banking. Okay. Yes, Narasimha committee phase second. Very good, you guys. It is 1997 Narasimha committee phase second. That is the narrow banking recommendation, from where the narrow recommendation come, right? Now, the graph shows a shift in the demand curve from D1 to D2. See this, okay? Now, which of the following could possible reason for this shifting? A rise in the price of the product itself, a fall in the consumer income, assuming the goods is a normal good, a rise in the price of substitute good, imposition of higher taxes of the product. Everyone, please answer this question. Please start answering this question, everyone. Gaurav, Harsh, Ranveer, Sunil, Kamal, everyone start answering the question. The shift in the demand curve from D1 to D2, it is actually because of which of the following possible reason? Shift in the demand curve is because of the which possible reason? Everyone, please answer. The correct answer is what? Okay, okay. So now you are all saying C, a rise in the price of substitute good. Now you are also all saying C. First of all, there is a shifting which is taking place here. Now here, first of all, I just want to give you the revision of this complete shifting and the movement concept. First of all, let's revise completely this shifting and movement concept, very important. First of all, there is a movement concept. Movement concept means either the upward or the downward shifting along the same demand curve. Movement means upward and downward, whereas shifting means either there is a leftward or rightward shift. Okay. Now, movement occurs when the price has its effect over the quantity demand and other factors remain constant. Whereas shifting take place or shifting occurs when price is actually constant and other factors are variable. The demand has the effect of other factor. And when there is a demand increase, there is a rightward shift. And when there is a demand decrease, there is a leftward shift. Okay. And in movements, remember, if the price is increasing due to which demand is decreasing, this is called as the contraction. And in contraction, the demand curve always goes upward. And if the price is in decreasing due to which demand is increasing, this is called as extension. And in this, the demand curve is always going downward, right? So this is a very important concept for you all, right? Now here, there is a rightward shift and there is a shifting. So price of the product itself, it actually belongs to the movement. Okay, now a fall in the consumer income, assuming that the good is a normal good. Now, normal good means there is a direct relationship between income and demand. So, if the income is decreasing, demand will also decrease. So, this cannot be the answer. A rise in the price of substitute product. Now, tea and coffee, this is a substitute product. Okay. So if the price of tea rises, obviously the demand of tea decreases. And when the demand of tea decreases, it actually leads to the increase in the demand of coffee. So here the demand is increasing and it can lead to the shift of the demand curve to the right. Obviously, C is the correct answer. Imposition of the higher taxes, you have less money to spend, demand will decrease. Okay, so C is the correct answer. Very good. This is a very complicated question. This is a very good question, especially this movement and shifting concept. Again, a very important concept for all of you. Done? Any doubt in this? Any doubt in this? See, if you have any doubt, kindly ask. And just please like and share the video to the maximum you can, everyone. Start like and share the video, guys. Everyone start liking and sharing the video to the maximum you can. Okay? Done? Now next question. Let's talk about which of the following statement regarding the velocity of money is incorrect. We have to choose the statement regarding velocity of money and we have to choose the incorrect statement here. We have to choose the incorrect statement. Now, velocity of money represents the frequency with which a unit of currency circulate in the economy to purchase goods and services. The velocity of money is calculated by dividing nominal GDP by broad money. Velocity of money and money multiplier are the same concept, measure identical economic factor. Velocity of money establish a link between broad money and nominal GDP. We have to choose the incorrect statement regarding the velocity of money. Everyone start answering this question. Incorrect statement regarding velocity of money. Everyone, you guys, please answer this question. We have to choose the incorrect statement regarding the velocity of money. We have to choose the incorrect statement here. It's simple, it's easy, you can all answer this question. Ranveer, Harsh, and Gaurav, and Sunil, and everyone start answering this question. Velocity of money. Which of the following statements regarding the velocity of money is incorrect? Start answering the question, everyone. Please like and share the video, guys. Everyone. Okay. So no one is answering yet. We have to choose the velocity of money, guys. Everyone. We have to choose the velocity of money, everyone. Okay. So first of all, velocity of money represent the frequency with which a unit of currency circulate in the economy. That is the correct definition of velocity of money. The velocity of money divided nominal GDP by broad money. Perfectly correct statement. The formula is nominal GDP divided by broad money. Good. Velocity of money and money multiplier are the same concept. No, money multiplier and velocity, these are the two different concept. Money multiplier is how base money, how reserve money, or you can say the base money is converted into the broad money. It is m3 divided by m0. It is not the velocity. Velocity of money is nominal GDP divided by broad money. Money multiplier is a whole different concept, so it is incorrect. Velocity of money establish a link between broad money and nominal GDP. That is correct. Okay, so if we talk about the correct answer, C is the correct answer. Okay, next. ABC Leasing Limited enter into an agreement with the Sunrise Steel Private Limited for leasing heavy industrial machinery worth rupees 80 crore. To finance the purchase, ABC Limited investing 25 crore from its own fund. Remaining 55 crore was borrowed from a financial institution secured by the leased asset and the future lease rental. The lease pays monthly rental directly into the escrow account operated jointly by the lessor and the lender. Out of each payment, the bank first recover its principal and interest and the remaining balance is transferred to the lessor. In case the lease rental falls short of debt obligation, ABC Leasing Limited must make up the deficit. Now, based on the given scenario, identify which type of lease is this. Operating lease, finance lease, leverage leased, or sale and lease back. Now we have to choose which type of lease is this. Okay, so read out the case study. Based on this case study, which type of lease is this? Everyone, kindly answer this question. Kamal, Ranveer, RK, everyone start answering. It's easy. You can all answer this question. It's so simple. It's easy. ABC Leasing Limited enter into an agreement with the Sunrise Steel Private Limited for leasing heavy industrial machine worth rupees 80 crore. To finance the operation, ABC Limited invested 25 crores of its own fund. Rest is actually paid by the lease rentals into the escrow account, which is jointly operated by the lessor and lender. Very simple. Tanya is correct. Kamal is correct. RK is correct. Everyone is correct. So it is called as what? So this is called as the leveraged lease. This is called as what? Leveraged lease. Leverage lease is when the lease rentals are used for just covering up the amount which is in the EMIs. Okay, that is called as the leverage lease. Now, there, if it is called as the borrowed fund, okay, this is the hallmark of leverage lease. Lesser is the equity participant, not the full owner. Again, it is the leverage lease. And here, the large asset value and shared risk with the lender, again, it is a leverage lease. So, if we talk about the correct answer, very you good guys sees the correct answer. It is leverage lease. Everyone is correct here. Good. Next question. Now see this and tell me the correct answer. I'm just switching off the camera, everyone. A company requires a machinery on a lease basis instead of purchasing it through the borrowed fund. Which of the following correctly reflects the account and financial implication of this decision? The lease asset is capitalized in the balance sheet, increasing both assets and liabilities, thereby impacting the debt equity ratio. Lease rental are treated as expenses in the profit and loss account, and neither the asset nor the liability in the balance sheet leaves the debt equity ratio unchanged. Lease rentals are amortized as a capital asset, hence increase the capitals or company's net worth over the time. Fourth, both lease asset and liability under lease are disclosed off balance sheet but still affect the debt equity ratio. Everyone, please answer this question. You can all answer this question, guys. Start answering this question. So the correct answer is what? Start answering the question, everyone. Okay, so Gaurav is saying D is the correct answer. Harsh is saying B is the correct answer. Kamal is also saying B is the correct answer. So everyone else start answering this question, you guys. So if we talk about the correct answer, which of the following is the correct answer here? Yes, see, when there is a leasing done, the lease asset is capitalized in the balance sheet when we are talking about the leasing thing. Okay, so lease rentals, first of all, lease rental are actually shown as the expenses in the profit and loss statement. There is no asset or liability which is changed in the balance sheet, because leasing, you don't become the owner. There is no ownership transfer, and when there is no ownership transfer, you cannot list that asset in your balance sheet. Okay, So the debt equity ratio, it remains unaffected. Only whatever the lease rentals you are paying, you have to show that lease rental in the profit and loss statement. Nothing else are changed. So if we talk about the correct answer, lease rentals are treated as expenses in the profit and loss account. Neither the asset nor the liability appears in the balance sheet. Leave the debt equity ratio unchanged. So yes, B is the correct answer. Done? Good. Next question. Under Section 135 of the Companies Act, which of the following statement is true regarding the corporate social responsibility spending obligation in India? This is a PYP, previous year paper question, everyone. We have to choose the correct statement regarding the spending obligation of the what? Corporate social responsibility. Company can transfer the unspent CSR fund to their profit and loss estate account after 1 year. Excess CSR spending can be carried forward and adjusted against the future CSR obligation. Companies must allocate exactly 2% of their net profit annually with no flexibility in the spending limit. CSR obligation applies only to the companies listed on the Indian Stock Exchange. We have to choose the correct answer here. Everyone, please choose the correct answer, guys. It's simple, but it is very important. So, last question you have told B. Okay. So, CSR, corporate social responsibility, first of all, ESG, if you all remember, ESG is considered as the modern dimension. It is considered as the modern dimension of the corporate social responsibility. This is also the question which was asked in the previous examination. Okay. And in the corporate social responsibility, a company has to spend at least 2% of their net profit in the CSR, and whatever the excess, if they are spending in any year, it can be adjusted with the future obligation. Okay. So if we talk about the correct answer, excess CSR spending, it can be carried forward and adjusted against the CSR obligation. At least 2% spending should be done. If you are doing more, it is adjusted towards the future obligation. Okay, it can be carried forward. Very good. Okay. Under Reserve Bank of India special 3-year SLTRO scheme, small finance bank are permitted to lend up to how much per borrower? Again, an important question. One word question, but it is very important. Okay, so SLTRO, the full form. Everyone, if you all remember the full form, this is very simple, very easy question, but it is important. This is a one word question. Okay, so SLTRO. First of all, just tell me the full form of this. Everyone, just tell me the full form of this. SLTRO. And everyone, kindly please start sharing this video so that it can reach to the maximum bankers, everyone. So that it can reach to the maximum banker, everyone. Start answering. Everyone, start answering, please. Okay. No answer yet. SLTRO, Special Long Term Repo Operation. It is a special long term repo operation. Okay, so this is what? This is the RBI's special scheme, and under which small finance banks are permitted to lend how much per borrower? It is 10 lakh per borrower. Very good, Harsh. Very good, Sunil. Very good. It is 10 lakh per borrower. Important question, right? So this is actually I have taken from here. So under this special, what RBI conducted a special 3-year long-term repo operation. Long-term repo operation is when Reserve Bank of India is giving loan to the commercial bank for a period between 1 to 3 years. That is called as what? Long-term repo operation. Okay, now here, small finance bank to be deployed for flash lending up to rupees 10 lakh per borrower. Okay, so for small finance bank, the maximum lending limit is 10 lakh per borrower. Okay, so it is the correct answer. If we talk about the correct answer here, yes, this is the correct answer. 10 lakh per borrower is the correct answer. Clear? Done? Okay. Good. Next question is what? Now see this question and tell me which of the following is the correct answer. XYZ Financial Service is an NBFC and involved in the acquisition of shares and securities. The characteristics are 92% of its total asset invested in the equity, preference, debt and loan companies. 65% of the total asset in the equity share, which are compulsory convertible into equities within 10 years from the issue date. Company doesn't trade in the investment except through block sales for the disinvestment purpose. The company's asset size is 120 crore. Based on the information, which of the following best describe XYZ Financial Service Limited? First, XYZ Financial Service Limited is classified as systematically important non-deposit taking CIC. XYZ Financial Service is an investment finance company. XYZ Financial Service is a venture capital company or it is a public investment company. Tell me the correct answer, everyone. Here, tell me the correct answer. Tanya, Kamal, Harsh, Sunil, Gaurav, everyone start answering the question. So the correct answer is what? Start answering the question. The correct answer is what? So Kamal is saying A, Tanya is also saying A, Gaurav is also saying A. Yes, if we talk about the correct answer, the correct answer is yes. A is the correct answer. Perfectly correct statement. So first of all, if we talk about the NBFCs, XYZ Financial Service is a non-banking financial company. Okay. So systematically important non-deposit taking CIC. What are the characteristics of that? This is very important for understanding, and this is very important from the exam point of view also. You have to learn this. First of all, that company should not hold less than 90% of their asset in equity, preference, shares, debt, or loans. Okay, then its investment in the equity share, okay, convertible into the equity share within a period of not exceeding 10 years, not less than 60%. Okay, asset side should be 100 crores or above. So here, asset side, correct. Okay, 65% which is compulsory convertible into equity, correct. 92% which is also correct. So if we talk about the correct answer, the correct answer is A. It is a systematically important non-deposit taking core investment company. So A is the correct answer. Very good. Yes, A is the correct answer. Next, which committee recommended the setting up of a national housing bank? Easy question. I always told you committees are very important. Okay, tell me. Which committee recommended the setting up of a national housing bank? Everyone. Which committee recommended the setting up of the National Housing Bank? It is C. Rangarajan Committee, Raghu Ram Rajan Committee, Deshmukh Committee, or SS Tarapur Committee? Everyone. Which committee recommended the setting up of a National Housing Bank? So, if we talk about the correct answer, the correct answer is what? Okay. Everyone start answering the question. Yes. So if we talk about which committee recommended the setting up of National Housing Bank, it is yes, Dr. C. Rangarajan Committee is the correct answer. SS Tarapur Committee, BCSPI Code, Banking Code and Standard Board of India, the establishment has been done by this SS Tarapur Committee. Raghuram Rajan Committee, it is related to the monetary policies. Okay, done? No, 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 no. So A is the correct answer. Good. Next question. Consider the following statement about the sunrise sector in India. Sunrise sectors are the industries that are characterized by the strong growth rate, innovations, High public awareness, attracting investor due to their long-term potentials. Textile manufacturing and coal mining are considered prominent example of the sunrise sector. Which of the following statement is correct? Everyone start answering. Which of the following statement is correct? Start answering this question. Everyone start answering this question. Which of the following statement regarding the sunrise sector is correct here? Okay, Kamal is saying A, Sunil is also saying A, Tanya A, Harsh. Okay. Which of the following is the correct statement? Sunrise sector, it has high level of growth rate, it has innovation, it has public awareness, it attract investor due to their long-term growth potential. Obviously, yes, this is the correct one. Textile manufacturing and coal mining, these are considered as the prominent example of the sunrise sector. No, textile and coal mining, these are not sunrise sector. You can say sunrise sector, green energy, fintech, this is the sunrise sector. Even the infrastructure is considered as the sunrise sector, right? So if we talk about the correct answer, A is the correct answer. Only one is the correct statement. Why both is incorrect? Why you are all saying D? Both is, why both is incorrect? A is the correct one. Everyone please answer. Okay. Next question. Which of the following statement regarding the Sustainable Development Goals is correct? SDGs, Sustainable Development Goal is correct. Sustainable Development Goal adopted by United Nations General Assembly in 2015 as a time frame between 2016 to 30. Sustainable Development Goal replaced the Millennial Development Goal, which has a time frame of 2000 to 2025. The total number of sustainable development goals adopted is 21, which cover environmental, economic, and social development objective. We have to choose the correct statement here. Now choose the correct statement. Sustainable development goals. We have to choose the correct statement here. Sustainable development goals. Everyone. Choose out the correct statement. Sustainable development goals. So me is saying A. Tanya is saying D. Okay, we have to choose the correct statement, guys. Okay, D. First, Sustainable Development Goal adopted by United Nations General Assembly in 2015 and has a time frame of 16 to 30. Correct statement. Sustainable Development Goal replaced by the Millennial Development Goals, which has a time frame of 2000 to 2025. No, because it is replacing the millennial development goals, so it is actually from year 2000 to 2015. From 2016 to 30 we have sustainable development goal. Okay, our total SDGs is 21. No, total number is 17. Everyone, this is wrong, this is wrong, this is correct. Yes, D is the correct answer. Now tell me the 17th Sustainable Development Goal. Climate action is which Sustainable Development Goal? Everyone. Climate action is which Sustainable Development Goal? Tell me. Important. Climate action, which number of Sustainable Development Goal? I have told you now, Sustainable Development Goal, you have to remember with the sequence. Climate action is min number. Yes, Tanya, very good. Gaurav, very good. Kamal, very good. It is in 13th number. So let's revise and take the complete sustainable development goal. So first is no poverty, zero hunger, good health and well-being, quality education, gender equality, clean water and sanitation, affordable and clean energy, decent work and economic growth. That industry innovation infrastructure, reduce inequalities, sustainable cities and communities, responsible consumption and production, climate action, life below water, life on land, peace, justice, and strong institution and partnership for goal. Among all of these, this is very important. Climate action. Okay, done. Yes, among all this is very important. Okay, good everyone. Kindly everyone, whoever are watching this video, at least just like the video. At least just like the video, guys. Everyone, whoever are watching the video, at least just please like the video. Okay, next question. Consider the following statement regarding the NBFCs that are exempted from registration with RBI due to dual regulations. Chit companies regulated under the Chit Fund Act 1982 by respective state government are exempted from RBI, housing finance company by IRDAI, merchant banking and stockbroking companies with SEBI. So, which of the following is the incorrect statement here? Everyone, kindly answer this question. Incorrect statement. We have to choose the incorrect statement here. Everyone, choose the incorrect statement here. Everyone, all the statements are incorrect. Me again read out the question. You are saying all the statements are incorrect. How? You are saying all the statements are incorrect. How? Again, read out the question, guys. Tanya is saying C. Only second is incorrect. Right. Chit companies are regulated by Chit Fund Act by the respective state government. Correct. Housing finance company by National Housing Bank. Okay. IRDAI ये तो insurance companies को करते हैं ना. They are regulating the insurance companies. Merchant banking company and stock broking company registered with SEBI. That is good. First and third are correct. Second is incorrect. We have to choose the incorrect, guys. So C is the correct answer. We have to choose the incorrect statement. Yes, C is the correct answer. Now see this. Regulator of NBFCs. This is again very important part. Very important part. You have to learn this. Venture capital fund, merchant banking, stock broking. They need to be registered with SEBI. Insurance company, they should have or issued by Insurance Regulatory and Development Authority. Nidhi company, Ministry of Corporate Affairs. Chit companies, respective state government. National Housing Bank, National Housing companies by National Housing Bank. Stock exchange or mutual fund by CP. Okay. Regulators of non-banking financial companies, important, everyone. Okay. Next question. Now tell me, fill in the blanks here. An infrastructure finance company is a non-banking finance company which deploy at least dash percent of its total asset in infrastructure loan as a minimum net owned fund of dash and as a minimum credit or rating of dash. Everyone, please answer this question. Simple one word question, but maybe this question is confusing for all of you. Okay, so tell me the correct answer, everyone. So Kamal is saying C is the correct answer. And everyone else, infrastructure finance company is a non-banking finance company which deploy at least dash percent of its total asset in the infrastructure loan. Yes, the answer is coming right. Very good, you guys. At least 75% of its total asset in the infrastructure loan has a minimum net owned fund of rupees 300 crores and have a minimum credit rating of A equivalent. C is the correct answer. Harsh, Sunil, Ranveer, Tanya, Kamal, everyone is correct here. Good. Next question. Mr. Arjun, our portfolio manager, purchased a call option on shares of XYZ Limited on 1st August. With a strike price of 500, expiry is 31st August. By 15th August, the market price of the share has already risen to 580. But Arjun was informed that he could exercise his option only on the expiry date, not before that. Based on this information, identify the type of option and the correct implication of this restriction. It is an American option and Arjun can exercise it any time before 30 minutes. It is a European option and Arjun can exercise it only on 31st August. It is an American option, but the broker has restricted early exercise, which is not allowed. It is a European option, which allows exercise any time before expiry. Now choose out the correct option. Now, American and the European option, the question related to that is a part of PYP, previous year paper question. This is a PYP, previous year paper question, everyone. Start answering. This is a PYP. Tanya, almost not the same question, but yes, the question which was related to the American and European option was asked in the examination. Kamal is also saying B. Tanya is also saying B. And everyone else, please start answering this question. Portfolio manager purchased a call option on XYZ Limited on 1st August with a strike price of 500 and an expiry of 31st August. Now, he was informed that they can exercise his right only on the expiry date. So, only on the expiry date. So, this is actually what? This is actually a European option. In a European option, you can exercise your right only at the time of expiration date, not before that. This is the European option. American option give you the right that you can took the decision anytime before the expiry date or even at the day of the expiry. So if you are taking decision anytime between the purchasing and the day of expiry or even at the day of expiry, American. If you have this obligation, now you have to take the decision only at the date of expiry. Then that is called as the European option. So if we talk about the correct answer, yes, it is a European option and it allows the urgent to exercise its right only on the expiry date, that is 31st of August. Yes, B is the correct answer. Good, everyone. Yes, B is the correct answer. Next question. Consider the following statement about the credit default swap. In a credit default swap, financial flows such as interest payments are swapped between parties to hedge interest rate risk. A credit default swap, buyer pays periodic premiums to CDS seller who guarantees the debt in the case of borrower's default. The reference entity in the CDS buyer is a borrower who has issued the debt security. CDS eliminate the risk of default from the financial system and completely transferring it to the CDS seller. We have to choose the correct statement here. Understand the question, read out the statement carefully, and then you have to answer. Understand the question, read out the question carefully, and then you need to answer, everyone. Everyone start answering. Now you have to answer this question, guys. So the correct answer is, tell me the correct answer, everyone. Okay, so now the answer is coming like B. B for this question or B for the previous question? B for this question or B for the previous question? Tanya is saying D. And everyone else, please answer this question. Credit default swap. So what is a credit default swap? First of all, what is a CDS? So it is like a financial derivative contract. It is like a derivative that actually allows you to transfer the credit risk of a loan to another party in exchange of the premium. Okay, so if you are thinking that the buyer will not pay, or if you are thinking that, okay, this loan will be defaulted, so you actually buy a premium, buy a risk security for that particular loan. That is called as credit default swap. Now, you all maximum are saying D is the correct answer. Now, just tell me, first of all, in CDS, financial flows such as interest payment are swapped between the parties to hedge interest rate risk. Credit default swap, here the risk is swapped, not any interest rate. This is not a currency swap. This is not an interest rate swap. So if you are saying that in CDS, the financial flows such as interest payment are being switched, no. Here the risk are being transferred. The risk are being swapped between the two parties, not the interest rate, not the currencies, right? So first is incorrect. Okay. Second, a CDS buyer pays periodic payment to the CDS seller who guarantees the debt in the case of a defaulting or borrower default. That is perfectly correct statement. The reference entity in the CDS is the borrower who issued the debt security. Correct statement. Now, CDS eliminate the risk of default from the financial system completely by transferring it to the CDS seller. Not at all. If you are a credit default swap buyer, it doesn't eliminate the risk of default. It provides you the protection against that. It doesn't eliminate. If you are borrowing the CDS, it doesn't know that your it doesn't mean that your risk are eliminated. Now you don't have any risk of defaulting. No, you have the risk of defaulting, and that's why you want a coverage for that defaulting thing. So TDS eliminate the risk of the defaulter? No, it actually provides the coverage. It simply shift the risk, doesn't eliminate it, right? So D is incorrect. So second and third is the correct statement. B is the correct statement. Yes, B is the correct answer, everyone. Any doubt in this question? If you have, please ask, everyone. Any doubt in this question? If you have, kindly please ask. Any doubt if you have in this question, please feel free to ask your doubt. If no doubt, give me a thumbs up, each and everyone. Harsh and Sunil, me, Tanya, RK, everyone, you guys. Clear? No doubt? Good. Now, next question. Next is company. Now, again, this is a very important question. Now, see this very tricky, very good question. Okay, just try to answer. Company enter into 6 into 9 FRA. Okay. Usually, I always give you one statement and I ask you what is the convention of this FRA, right? Now, here you have to tell me a company enters into 6 into 9 FRA to hedge its future interest rate exposure. Now, which of the following interpretation is incorrect? Which of the following interpretation is incorrect? The FRA starts 6 months from now, ends 9 months from now. Incorrect. The company is seeking protection for a period of 3 months, beginning after 6 months. The contract involves exchange of interest payment on a notional principal only. The contract is a total tenure of 9 months, starting today on a fixed rate loan. Everyone. Now, this is a very good question. Now, this is a very good question. Now, Acha, don't answer in a rush. Don't answer in a rush. Please, just read out the question. Everyone, this is a tricky question. Don't answer in rush. I want to answer very, just read it out first of all, and then you have to answer. Okay. So Tanya is saying B, me is saying D. Okay. And everyone else, please answer this question. Everyone, please answer this question. Okay. First of all, see, this 6 into 9 FRA, very good question. This 6 into 9 FRA is what? I have always told you the thing is now into total. Remember how you write the convention of FRA now into total. Okay. 6 into 9, it means that they want a loan which is starting from 6 months from now, 6 months from now, for a period of 3 months. Okay, that is actually written into 6 into total 9. Okay, if 6 into 9 is written, it means 6 months from now for a period of 3 months. Okay, now it means that it start 6 from month from now. True. and 9 month from now. That is also true because it is written 9 months from now. The total is 9 months. So it is ending 9 months from now, 6 months from now, after 6 months, for 3 months. It is means total 9 months from now. That is correct statement, not wrong. Nothing is wrong. Company is seeking protection for a period of 3 months period beginning after 6 months. Perfectly correct statement. After 6 months, I want to have a loan which actually cover the risk for 3 months, right? That's why it is written as 6 into 9. Now, the contract involves exchange of interest payment on a notional principal only. That is also correct. Now, see, the contract is for total tenure of 9 months starting today on a fixed interest loan. That is actually what incorrect statement. So a 6 into 9 FRA doesn't run for 6 months. No, it doesn't run for 6 months. It starts after 6 months for a period of 3 months. So it is not running like completely ninth month. No, it will start after 6 months and it will only last for 3 months. You have to understand the difference. Okay. So it doesn't means you are taking a loan for a 9 month which are starting for today. No, it means that you have to take a loan only for 3 months, but you have locked the interest rate for the future, and the future is 6 months ahead. Okay, and that's why D is the incorrect statement. We have to choose the incorrect statement. D is the incorrect statement. Me only has given the correct answer, and this is actually a tough question. Okay, well done, me, well done. Kamal also given the correct answer. Good. Any doubt here? Very good question. Good, very good question, because now I have just mixed up the statement here. You have to understand what is 6 into 9, okay? It means that you want to take a loan for 3 months only for the future date, and you have blocked the interest rate from now, and that future is 6 months ahead. That is 6 into 9, okay? And that's why D is the incorrect statement. Very good. Next question. Reena took a health insurance policy disclose all the necessary details about her medical history, lifestyle, pre-existing condition to the insurance company. Later, she claimed after an emergency situation. Okay, Reena house is damaged by the fire. Okay, she had two insurance policy with a different company, both covering the same risk. Both insurer paid part of the claim, but neither paid the full amount of the loss. Which of the following principle are illustrated in each of the following situation? Now tell me the correct answer here. Tell me the correct answer here, everyone. Start answering this question. Easy question. This is easy, everyone. Answer this question, guys. It's very good. Easy question. The correct answer is what, everyone? Everyone, kindly please like and share the video, guys. Whoever are watching this session, kindly please like and share the video to the maximum you can. Okay, so if we talk about the correct answer, yes, A is the correct answer. First is the principle of utmost good faith, and second is the principle of contribution, right? This is utmost good faith, okay, and this is the contribution, right? Yes, A is the correct answer. Now, next question. A loan company is a NBFC classified as per which type of classification? Everyone, start answering. A loan company is actually classified as per which type of classification of NBFC? Everyone. Liability based, activity based, size based, or none of the above? Loan company, easy, na? Easy. Loan company. Okay, so yes, it is a activity based classification. See, liability based classification, we have category A and B. Category A is called as NBFC D, deposit taking. Now tell me, if there is a NBFC, non-banking financial company, deposit taking, what is the minimum time period for which they can accept the deposit and the maximum time period? Tell me the correct answer. And B is NBFC ND. Okay. Size-based classification, if there is an NBFC who have the asset size of 500 crores and above, it is called as systematically important non-deposit taking NBFC. Okay, that is size-based classification. Tell me the correct answer. If there is a liability based classification, okay, NBFC D and NBFC ND. So D, minimum time period for which they can accept the deposit and maximum time period for which they can accept the deposit. Everyone, tell me the correct answer. Now, meanwhile, answer this question. Consider the following statement regarding the revision of national account. 12 month to 60 month. Perfectly correct statement, Tanya. 12 month to 60 months. Good. Now, tell me, consider the following statement regarding the revision of national accounts in India. The revision of the base year is mainly done to increase the GDP number and attract the foreign investment. India's national account revision aims to align with the system of national account 2008 deployed by the international organization like IMF and United Nations. Once fixed, the methodology for GDP estimation remain unchanged regardless of the changes in the structure of the economy. Which of the following above statement is or are incorrect? We have to choose the incorrect statement here. Everyone, now tell me the incorrect statement. Again, a good question. The revision of SNA is actually because of what? We have to choose the incorrect statement. Tell me the correct answer, everyone. Here, tell me the correct answer. It is a good question, everyone. Kindly tell me the correct answer. The revision of the base year is mainly done to increase the GDP numbers and attract the foreign investment. India's national account revision aimed to align with the system of national account 2008 deployed by the international organization like IMF and UN. And once fixed the methodology for GDP estimation, it remained unchanged regardless of the changes in the structure of the economy. So now Gaurav is saying C is the correct answer, me is saying D is the correct answer, and everyone else, please answer this question. So the correct answer is what? Consider the following statement regarding the revision of national accounts in India. Revision of national accounts in India. See, only third is the incorrect statement. Okay. So third is the incorrect statement. That is correct. So because it is saying that once it is fixed, it is fixed. No. Methodology is always revised periodically to reflect the economic changes. So it is revised periodically to reflect the economic change. So yes, statement third is incorrect. That is so correct. Okay. So third is incorrect. Now, India's national account revision, that is, this second statement is correct. Now, first statement, the revision of the base year is mainly done to increase the GDP numbers. No, it is not to inflate the number. It is just to give you the accurate and more recent comparison. It is not to inflate the numbers. Okay. So statement one and third is wrong, are wrong. Statement second is correct. We have to choose the incorrect statement. D is the correct answer. Statement first and third are incorrect. Okay. Done. Done, everyone. Good. Next question. Given the following data in crores, financial consumption, C, government financial consumption expenditure, G, gross domestic capital formation investment, export of goods, import, net indirect taxes, changing in inventories. We have to calculate the GDP at market price. Everyone. We have to calculate the GDP at market price. Everyone. We have to calculate the GDP at market price, everyone. So the correct answer is what, everyone? We have to choose the correct answer. Easy, it's easy. You can all answer this question. It's easy, simple. You can all answer this question. Okay. Tanya is saying B. Gaurav is also saying B. And everyone else. Hmm. So GDP at MP, gross domestic product at market price. It is C plus I plus G plus X minus M. This is simple, the formula. No, here changes in inventories is 300. It is included in I. So already included. We don't need to add it exclusively. Already it is included in 2000. Plus net indirect taxes. We don't have any use of net indirect taxes. So consumption 6200 plus investment, it is 2000 plus G 2500 plus x minus m. X minus m is 500 minus 500, right? So if we talk about the correct answer, 6200 plus 2000 plus, yes, 2000. So it is 10,200, the correct answer. Yes, B is the correct answer, everyone. Yes, B is the correct answer. Done. Next. Following the statement regarding the causes of India's 1990 economic crisis analyzed by Jagdish Bhagwati. Now, you can also analyze that Bhagwati committee is related to what? It is related to 1990 economic crisis, okay? So, Jagdish Bhagwati, they have given the causes of 1990 economic crisis. You have to choose the incorrect statement based on that. Excessive bureaucratic control over the production, investment, and trade led to inefficiency and slow growth. India's economic policy but outward looking, focusing on export promotion and foreign competition. Inefficient functioning of public sector enterprises add to the fiscal stress. Restrictive trade and foreign investment policies discourage competitiveness and capital inflow. You have to choose which of the following statement is incorrect regarding the causes of India's 1990 economic crisis, which is analyzed by Jagdish Bhagwati. Tell me the correct answer, everyone. We have to choose the incorrect statement, okay? Incorrect statement. Tell me the correct answer. D. Second and fourth are the incorrect statement, okay? And everyone else. Second and fourth are the incorrect statement, and everyone else, please answer. 1990 economical crisis as analyzed by Jagdish Bhagwati. 1990 economical crisis as analyzed by Jagdish Bhagwati. Everyone. Okay. So first, excessive bureaucratic control over the production, investment, and trade led to inefficiency and slow growth. Yes, this is one of the reasons why economical crisis happened in 1990. India's economic policy were outward looking. No. India's economic policies were inward looking, import substitution. They were not focusing on the export. They were focusing on more and more import, and that was the reason for the economical crisis. Insufficient working of the public sector enterprises. Yes, that's why privatization has been introduced. Restrictive trade and foreign investment policies discourage competitiveness. That's why globalization has been introduced. So, because of the first point, liberalization has been introduced. Because of this third point, privatization has been introduced. Because of this fourth point, globalization has been introduced, because these were the causes of the 1990 economical crisis. So if we talk about the incorrect statement, second is the incorrect statement, A is the correct answer. Okay, so a question related to this was asked in the previous examination cycle. Okay, causes for the 1990 economical crisis. I have twisted it, I have reframed this question to a tricky version, else the question was easy, which was asked in your examination. Okay, done? Good. Yes, LPG reform. Now tell me, now this is the easy question. This was the PYP. This was the PYP which was asked in the examination. In March examination cycle. Tell me the correct answer. Sorry. Oh, sorry. Chalo, tell me the correct answer. Which of the following factors were responsible for the implementation of economic reform in 1991? Everyone start answering. Everyone, chalo, start answering the question. Everyone. It's simple. You can all answer this question now. Everyone. It's simple. You can all answer this question. Everyone. Please start answering this question. Yes, all of the above is the correct answer. Right? All of the above is the correct answer. Okay. Next. 10-year bond with a face value of 1000 has an annual coupon rate of 8%, is currently priced at par in the market. Okay. Its current market price is also 8%. Now consider the two interest rate change. The interest rate increases from 8 to 9%, the interest rate decreases from 8 to 7%. Now tell me which of the following change in the bond price under this scenario is correct. Now tell me the correct answer here. Read out the question carefully. Apply the bond theorem. Tell me the correct answer. Read out the question carefully. Apply the bond theorem and then you have to answer. Read out the question, apply the bond theorem, and then you need to answer, everyone. Look, come on, answer this question. It's easy, you can all answer this question. Kamal is saying D. The price will remain unchanged in both scenarios as the interest rate change in by 1%. Okay. And everyone else, answer this question. This is a tricky question. Now you need to understand the concept and then you need to answer. This is a tricky question. Okay. First of all, we know that as the bond theorem 1 says that, theorem 1 says that as the market interest rate increase, bond price decrease, and as the market interest rate decrease, bond price increase, right? We have this theorem, okay? So we know that if the market interest rate increases, in three bond price will decrease, and if the market interest rate decrease, the bond price will increase. Okay, so this will be the thing. First of all, it will change, so D cannot be the answer. The prices will remain unchanged. No, it cannot be the answer, because in both the scenario the interest rate will behave, and in this the bond price will decrease and increase. Now see the theorem second. Theorem second says that whenever there is an increase and decrease in the same proportion, whenever there is an increase and decrease in the same proportion, always remember bond price increase will always greater than bond price decrease. Means if the market interest rate is decreasing, you know that bond price will increase. If the market interest rate is increasing, you know that the bond price will decrease. Okay, but in both the scenario, if the proportions are same, always remember the bond price increase will always greater than the bond price decrease. Okay, So the price of the bond will decrease more in scenario A? No. The bond of the price will increase more in scenario B, then it will decrease in scenario A. Yes, B is the correct answer. The price remain changes in both scenarios is exactly equal. No. So B is the correct answer. No, no, no. B is the correct answer. The bond price decrease will more. No, increase will always more than the decrease, Kamal. Increase will always more than the decrease. And this is a very good question. Okay. We have used two bond theorem. Bond theorem 1 and bond theorem 2. Any doubt in this question? Any doubt in this question? If you have, please ask. Clear, everyone, just tell me. Rini, Ranveer, RK, Gaurav, Tanya, Kamal, and everyone. Just tell me. Clear, everyone? Good. Next question. Now, which of the following is not true about social infrastructure? Incorrect statement we have to choose about social infrastructure. We have to choose the incorrect statement regarding the social infrastructure. First, health is the most crucial component of the social infrastructure. Education, water supply, transportation, agriculture, allied activity, infrastructure, irrigation, management, forest, land, energy, welfare program, these are all included in the social sector. We have to choose the incorrect statement here. We have to choose the incorrect statement here. Everyone. We have to choose the incorrect statement here. Everyone, you guys, please answer this question. Okay, Tanya, good. Kamal, me, Gaurav, Renee, please answer this question. Incorrect. Both are the correct statement. Easy question. Both are the correct statement. So neither one nor two is the incorrect statement. Yes, D is the correct answer. Good. Now, eighth five-year plan, significant delay due to the several factors include political changes, global economic shift, and budget imbalances. Right? Now, you have to tell me which of the following does not directly contribute to the delay in the implementation of eighth plan. The changes in the government in June 1991, which lead to the political instability, maximum global economical changes that impacted India's economic policies, the fiscal imbalances of 1980 that affect the budgetary planning, the decision to maintain the eighth plan period from 1990 to 1995 rather than shifting it to 1992 to 1997. Which of the following factor doesn't directly contribute for the implementation of eighth five-year plan? We have to choose the correct answer. Which of the following factor doesn't directly contribute to the implementation of eighth five-year plan? Everyone, tell me the correct answer. Actually, the question is this. Okay, just tell me the correct answer now. Everyone, Kamal, Ranveer, RK, and everyone, kindly start answering the question. So see, when we are talking about, we have delayed the implementation of eighth plan. Eighth plan starts from 1992 till 1997, and earlier from that, we have taken a 2-year planning holiday from 1990 to 1992, which is also called as the annual plans, right? Now, which of the following factor doesn't directly contribute to the implementation of the eighth plan? Doesn't directly contribute. The changes in the government changes which lead to the political instability, that was the reason why the eighth five-year plan was delayed. Massive economical changes, yes, there was economical crisis happens, then the introduction of LPG policy. This leads to the delay in the implementation of eighth five-year plan. Fiscal imbalances of 1980s that affected the budgetary planning, that is also the reason. These were the reason which directly influenced the delay of the eighth plan. And nine, it is actually the consequence of all these things. Okay, and we have planned to shift it to 1992 to 11. So obviously D is the correct answer. Okay, everyone, done. Next question. When the demand of a commodity decreases due to the change in the climate, then the demand curve will shift or move. Everyone, please answer. Now, this is easy. Now, this is easy. You can all answer this question, guys. This is easy. You can all answer this question, everyone. Please start answering this question. So, when the demand for a commodity decreases due to the change in the climate, the demand curve will shift or move. Everyone. The demand curve will shift or move. Everyone, please answer. Yes. So if we talk about the correct answer, first of all, when the demand of the commodity decreases due to the climate is the other factor. So yes, it actually leads to the leftward shifting of the demand curve. True. Leftward shifting of the demand curve. Yes, true. Done. Next question. We have to choose the incorrect statement here. Small Industrial Development Bank of India has been set up in 1994 under the Act of the Parliament, CAIIB Act 1993. Now, it provides direct and indirect finance to MSME, help in expanding marketing channels of the product of MSE in the domestic market only. We have to choose the incorrect statement, guys. Everyone, choose the incorrect statement. Everyone, Tanya, RK, Gaurav, Ranveer, Ananya, everyone, please answer this question. Choose the incorrect statement. We have to choose the incorrect statement, everyone. The incorrect answer is we have to choose the incorrect statement, everyone. Please start answering this question. Okay, so B or A. You are saying either B or A. CITB has been set up in 1994. No, CITB has been set up in 1990 and the act has been passed in 1989. First is the wrong statement. CITB's headquarter is in Lucknow, right? Okay, and it is the principal development financial institution for the micro, small, and medium enterprises. Second, it provides direct and indirect finance to MSME sector, help in expanding the marketing channels for the product of MSME in the domestic market only. No, it helps to expand the MSME in the domestic as well as in the international market. So if we talk about the incorrect statement, both the statements are incorrect. Guys, both the statements are incorrect. Yes, C is the correct answer. Both the statements are incorrect. Next question. Market demand curve obeys what? Law of downward sloping demand, law of upward sloping demand, law of diminishing, or none of these? Market demand curve obeys what? Law of downward sloping, upward sloping, law of diminishing, or none of the above? Everyone, please answer this question. Market demand curve obeys what? Everyone, market demand curves obeys what? Simple. The demand curve, first of all, the demand curve, it is from the buyer's perspective. It shows the relationship of price over the quantity demand. It shows the inverse relationship between the price and quantity demand. As the price increases, quantity demand decreases, vice versa. Then law of demand always is a downward sloping curve from left to right. It is a downward curve, downward sloping curve. Okay. And we have to take all other factors constant. So market demand curve always follow law of downward sloping demand, not law of diminishing. It is downward sloping demand. Upward sloping, it is law of supply. Upward sloping, it is the supply curve. Okay, done. It's very simple. Again, you all are confused. It's very simple, but you all are confused. Okay, done. Next question. Which of the following statement is incorrect regarding the amendments which are made to the Chapter 3B of RBI Act in 1997 concerning the non-banking financial companies? A non-banking financial company was required to obtain a certificate of registration for RBI and maintain the NOF. All the NBFCs are mandated to create a reserve fund and transfer at least 20% of their annual profit to it. RBI was empowered to prescribe policies only for the public sector NBFCs regarding income recognition and accounting standard. RBI was authorized to order special audits and file winding up petitions against the non-banking financial companies. We have to choose the incorrect statement here. We have to choose the incorrect statement here, everyone. We have to choose the incorrect statement here. Everyone, please answer. We have to choose the incorrect statement here, everyone. Regarding the amendments of Chapter 3B of Reserve Bank of India Act in 1997, Chapter 3B. Okay, Gaurav is saying C is the incorrect statement. RBI was empowered to prescribe policies only for the public sector NBFCs regarding income recognition and accounting standard. So Gaurav is saying C and everyone else. Gaurav is saying C and everyone else. See, I want an answer from each and every one of you. I want an answer from each and every one of you. Tell me the correct answer, everyone. So, NBFCs are required to maintain the NOF and registration of certificate of registration from RBI. All NBFCs are mandated to create a reserve fund and transfer at least 20% of their annual profit to it. True. NBFCs, RBI was empowered to prescribe the policies only for the public sector. All the NBFCs, RBI is empowered to actually prescribe the policies for the complete non-banking financial companies regarding as the income recognition and accounting standards. So obviously, C is the incorrect statement. We have to choose the incorrect statement. Yes, C is the incorrect statement. Next question. Shift in the supply means, everyone. Very simple. When changes in the factor other than goods own price affect the quantity supplied. When changes in the goods own price affect the quantity supplied. Both A and B or none of the above. Shift in the supply means what? Everyone, shift in the supply means what? Shift in the supply means what? Everyone start answering. Shift in the supply means what? So the correct answer is when the changes in the factor other than goods own price affect the quantity supplied. When changes in the goods own price affect the quantity supplied. Both A and B or neither one nor B. Everyone kindly please like and share the video. Kamal is saying both is the correct answer. Kamal, again read out the question and then answer. Kamal, again read out the question and please then answer. Okay? Just read out it again and then answer. You can all answer this question easily. Shift in the supply means shifting. It occurs when the factors are variable. Other factors are affecting the supply and the prices are constant. When the prices is happening, it actually lead to the movements in the supply curve. Shifting occurs when the changes in the factor other than the goods own price affect the quantity supplied. A is the correct answer. Right, very good. Next, the RBI observed that the money supply in the economy is growing rapidly due to the inflationary pressure. At the same time, several banks are aggressively dispersing retail and personal loans. To address this, RBI decided to take a direct measure without altering the interest rate. Which of the following action is the RBI's most likely to take in this scenario? Reduce the repo rate, increase the CRR, decrease the CRR, increase the bank rate. Everyone, please answer this question. Now you can all answer this question. Everyone, start answering this question. RBI observed that the money supply in the economy is growing rapidly. Everyone, answer this. Everyone, start answering this question, guys. Okay. D and B. Now you are all confused in either D or B. Oh, Gaurav, increase the repo rate. Where is the option? Where is this option? Increase the repo rate. Okay, first of all, there is an increase in the money supply due to which the inflationary measures are there. So inflationary measures, if there is inflationary measure, we have to reduce the money supply. The goal is to reduce the money supply. Now if we are reducing the repo rate, if it is reduced, it means that RBI is giving cheaper loans to the bank. Now, bank borrowings will be high. Bank borrowings will be high. They will lend more in the market. The market has money supply increase. So, it cannot be the answer. Increase in the CRR, cash reserve ratio increase. Now, when the cash reserve ratio is increased, bank has to deposit more cash with the RBI. So, obviously, they have less cash with themselves. Less cash with themselves, so obviously they will lend less in the market. The market liquidity or money supply will be down. We have to choose the money supply down. Obviously, B is the correct answer. B is the correct answer. It is increasing the cash reserve ratio. B is the correct answer, everyone. Okay. B is the correct answer. Done. Next, now see. Country A has shown a 7% increase in GDP over the last year, driven mainly by the industrial expansion and export. However, its Human Development Index has remained unchanged with persistent issue in healthcare and education access. Now, country B has recorded only a 3% GDP growth this year, but significant investment in public healthcare and education and poverty reduction program had led to the notable rise in the life expectancy, literacy rate, and overall well-being. Now, based on the above situation, which of the following best distinguish between the economic growth and development? Now, country A is experiencing economic development while country B is experiencing growth. Both countries are showing development. Country A reflect growth without development while B demonstrate development with despite moderate growth. Economic growth and development are synonyms and both countries are progressing equally. Just choose the correct answer here. Everyone choose the correct answer here. Everyone, please like the video. Whoever are watching this session, please everyone like the video, guys. Okay, now you are saying C, C, C. First of all, if we talk about the growth and development concept, what is growth and what is development? Growth means increase in the GDP or national income. Okay, quantitative increase, that is growth. Development means qualitative increase. We are growing, we are providing better health care, reduce poverty, inequalities. In this we are actually improving the quality of the life of the people. That is development, right? So if we talk about country A has 7% increase in the GDP over the last year, driving mainly by the industrial expansion. However, HDI remains the same. It is actually the concept of growth with no development, whereas country B has recorded only 3% growth. So there is a growth, but significant increase. Development here is good, growing. Now, country A is experiencing development, no. Both countries are showing development, no. Country A reflects economic growth, true, without development, true. While country B demonstrate development despite economic growth. C is the perfectly correct statement. Yes, C is the correct answer. Good, everyone. Yes. Next, FDI is prohibited in which of the following sectors? Defense, health, irrigation, or lottery business. FDI is prohibited in which of the following sectors? FDI is prohibited in which of the following sectors? Everyone. FDI is prohibited in which of the following sector? Everyone. Simple, na? Which of the following sector FDI is prohibited? Foreign direct investments. Tanya, Ananya, Kamal, everyone start answering. FDI. FDI is prohibited in which of the following sector? It is prohibited in the lottery business. Obviously, D is the correct answer. Sunil and Ranveer. No, irrigation, health, defense, it is all allowed. FDIs are all allowed in defense, health, and irrigation. It is not allowed in the lottery business. So obviously, D is the correct answer. Okay, done. Next question. What is the current FDI limit in the telecom sector under the automatic route in India? Current limit in the telecom sector. Current limit in the telecom sector, everyone. What is the current limit in the telecom sector? 49%, 74%, 100%, or 51%? Tell me the correct answer. What is the current FDI, foreign direct investments, limit in the telecom sector under the automatic route in India? Everyone start answering this question. Okay, so Kamal is saying A, 49%, and everyone else? And everyone else, please answer this question. Yes, C is the correct answer, Kamal. No, 49%. No, 49%. 49%, if I'm not wrong, it is allowed in the public banking, public sector banks. Okay. 100% FDIs are allowed in the telecom sector through the automatic route. So obviously C is the correct answer. Next question. Consider the following statement about the trade receivable and discounting system. Trade receivables and discounting system facilitate financing of the trade receivables or MSME only from the private sector. Corporate buyer exclude government departments and PSUs. Transaction process under TREDS are with recourse to the MSME supplier. Both factoring and reverse factoring are permitted under the trades platform. We have to choose the correct statement here. We have to choose the correct statement here. After this question, we will be taking a break, okay? And then we will be starting the next, okay? After this, we will be taking a break and then we will be starting again. Everyone, please answer this question. Consider the following statement regarding the trade receivable discounting system. Everyone. B, second and third. Ananya is saying B, second and third are the wrong, or sorry, correct statement. Okay. And everyone else, Kamal, Sunil, and everyone, kindly please answer this question. Okay. Trades financing. Facilitate financing of the trade receivable of MSME only from the private sector buyer? No. Buyer. See, seller can only be MSME, that is true. But buyer, they can be the private sector corporate buyer. They can be the government departments. They can be the public sector undertakings. Buyers can be anyone. Sellers are only MSME. Okay. Transaction process under the trades are with recourse. No, it is always without recourse to the MSME supplier. Means if the what? If the buyer defaults on the payment, the bank or the financial institution has to completely absorb the loss. Okay, they cannot demand the repayment from the seller. Third, factoring and reverse factorings are permitted under the triplet platform. Correct. So first and second, these are the incorrect statement. Third is the correct statement. C is the correct answer. Only third. Okay. Done, everyone. Only third is the correct statement. Okay. Okay, so let's start with the next question quickly. Okay, there is a retirement fund scheme in an open-ended scheme with a compulsory lock-in of 5 years or till the retirement age, whichever is earlier. A children fund is an open-ended scheme with lock-in of at least 3 years or till the child turned 21, whichever is earlier. Both are the example of solution oriented scheme meant for specific life goals. We have to choose the correct answer here, everyone. We have to choose the correct answer here. Everyone, kindly just answer this question. Everyone, you guys, start answering this question. Very simple, very easy. We have to choose the correct answer. Okay, so Kamal is saying A. A and C are correct. A retirement fund is an open-ended scheme, yes, with a compulsory lock-in of 5 years or till the retirement age, whichever is earlier. That is correct statement. A children fund is an open-ended scheme with a lock-in of at least 3 years or till the child turn 21. No, till the child turn 18 years. They have the lock-in period of either 3 years, sorry, not 3 years, 5 year, or till the child turn 18 years, whichever is earlier, wrong. These are solution oriented scheme, yes. So A and C are the correct answer. Okay. Good. Next question. So before moving to the next question, I have given the screenshot of the retirement fund and children's fund. You just need to look it out. Okay. Next. Minimum capital requirement for a merchant banker. 10 crore, 5 crore, 50 crore or 10 lakh. What is the minimum capital requirement for a merchant banker? Everyone. Minimum capital requirement for a merchant banker. Everyone kindly please answer this question. Minimum capital requirement for a merchant banker. Everyone kindly please answer this question. Minimum capital requirement for a merchant banker. Everyone start answering this question. Yes, it is 5 crore. B is the correct answer. Next, choose the correct statement. Non-recourse factoring. In this type of factoring, the factor does not take the risk of default. If the debtor fails to repay the invoice, the liability falls on the business firm itself. Recourse factoring, the liability of the bad debts remains with the factor and they cannot reclaim the money from the business in case of debtor default. We have to choose the correct statement here now. Non-recourse factoring and recourse factoring. We have to choose the correct statement. Everyone, you guys, please answer this question. We have to choose the correct statement regarding the non-recourse factoring and recourse factoring. Everyone. Neither one nor two. Kamal is saying neither one nor two. And everyone else, kindly please answer this question. It is non-recourse factoring and recourse factoring. Yes, non-recourse factoring means you are transferring the risk to the bank or financial institution, which is also called as the factor. So if the buyer doesn't able to pay, then the bank and financial institution has to bear the loss completely. They cannot demand the repayment. So it is called as non-recourse factoring. So the definition which is written here is wrong. It is called as recourse factoring, and this is the definition of non-recourse factoring. The first is wrong, second was wrong. Neither one nor two is the correct statement. Neither one nor two is the correct statement. Okay, done. Next question. Consider the following statement regarding the MPC failure in maintaining the inflation target. MPC is considered to have failed if inflation exceeds the upper limit in any single month. If the average inflation remains below the lower tolerance limit for 3 consecutive quarters, it is considered as the failure of Monetary Policy Committee. Monetary Policy Committee has to revise the inflation target immediately upon the failure. We have to choose the statement regarding the failure of MPC committee in maintaining the inflation target. Now it is a very good question. Now tell me the correct answer, everyone. Tell me the correct answer. Everyone, please answer this question. Everyone, please start answering this question. Which of the following statement regarding the failure of Monetary Policy Committee in maintaining the inflation target? It is actually correct. Which of the following statement is correct here, everyone? Statement 1, statement 2nd, or statement 3rd? Which of the following statement is incorrect? Everyone, kindly please answer this question. Which of the following statement is incorrect? Everyone, guys, please answer this question, guys. Only second is the correct statement. Ananya saying only second means B is the correct answer. And everyone else, Monetary Policy Committee is considered to have failed if inflation exceeds the upper limit in any single month. No. If we talk about the correct answer, see what is the failure of the Monetary Policy Committee means. So under these two circumstances only, it is considered as the failure of Reserve Bank of India's Monetary Policy Committees for the inflation. The average inflation is more than the per tolerance level for the inflation target for three consecutive quarter. We have to measure it from the three consecutive quarter. If from the three consecutive quarter, the average inflation rate is more than the upper tolerance level, then it is the failure of Monetary Policy Committee. And the average inflation is less than the lower tolerance level for any three consecutive quarter. Okay. So first, MPCC is considered to have failed if the inflation exceeds the upper limit in any single month first. If average inflation remains below the lower tolerance level for the three consecutive, yes, that is correct. MPC has to revise the inflation target immediately upon the failure. So if we talk about the correct answer, yes, B is the correct statement, everyone. Yes, Ananya, Kamal, B is the correct statement, guys. Everyone, whoever are watching this video, kindly please at least like the video, guys. If please, everyone, kindly please like the video. Done. Next question. Reena invested 6 lakh in a mutual fund. After 2 years, the market value of investment grew to 7 lakh 50,000. What is the absolute return on her investment? Very easy. Reena invested 6 lakh in a mutual fund. After 2 years, the market value of her investment grew to 7 lakh 50,000. What is the absolute return on her investment? Simple, very simple question. Tell me the correct answer. Very simple question. Very simple question. 6 lakh. Now the market value has grew to 7 lakh 50,000 after 2 years. What is the absolute return on the investment? Everyone, absolute return on the investment. Simple. New value 7 lakh 50,000 minus old value 6 lakh upon old value 6 lakh into 100, right? So this is the absolute return on her investment. Okay, so if we talk about the correct answer, it is yes, 25%. A is the correct answer. Good. Next question. ABC Component Private Limited is an auto part manufacturing unit. The firm has made the following investment reported turnover figure for the current financial year. Investment in the plant and machinery 22 crores, annual turnover 95 crore. Meanwhile, there is another company XYZ Tool Private Limited. Another firm in the same industrial park has investment in the plant and machinery 3 crore, annual turnover 8 crore. Based on the revised MSME classification, identify the correct classification for both the firm. We have to identify the correct classification. This is as per the classification which is done in 2025, the micro, small and medium enterprises classification for 2025. Correct answer is what, everyone? Please answer this question. ABC Components Private Limited is what, and XYZ Tool Private Limited is what? D, medium and small enterprises. Tanya is saying D. And everyone else? Tanya is saying D is the correct answer. And everyone else, please answer this question. ABC Component Private Limited is an auto part manufacturing unit. The firm has made the following investments and reported the annual figure for the current financial years. Everyone, kindly please start answering this question. Tanya, only Tanya has given the answer. Kamal is saying C. Both are the small enterprises. Micro, small and medium enterprises, guys, XYZ and ABC. What are ABC and what is the XYZ? Hmm. So now this is very, very important for all of you guys. You have to learn the updated classification of the micro, small, and medium enterprises. Updated classification, very, very important. So if we talk about the micro enterprises, if your investment in the plant and machinery doesn't exceed 2.5 crore and your turnover doesn't exceed 10 crore, then you are a micro enterprises. If your investment in the plant and machinery doesn't exceed 25 crore, whereas your turnover doesn't exceed 100 crore, then you are a small enterprises. And if your investment doesn't exceed 1.25 crore and your turnover is 500 crore, doesn't exceed 500 crore, then you are a medium enterprises, right? This is very important for all of you because the question can be asked in your examination, everyone. Okay, now see, here the turnover is 95 crore and investment is 22 crore. Investment is 20 crore, 22 crore and turnover 95 crore. Small enterprise. So this is a small enterprise. Now investment here is 3 crore, turnover 8 crore. See, 3 crore and turnover is 8 crore. Now one thing is exceeding. Only one thing is exceeding. Now we have to shift it to the small enterprises. Yes, it is a small enterprise. Okay. Yes, guys, it is a small enterprise, guys. Very good. So if we talk about the correct answer, see. Kamal, very good. Very good, you guys. See now, investment in the plant and machinery is 3 crore and turnover is 8 crore. Turnover is within this limit, 8 crore. But here, investment is 3 crore, which is exceeding 2.5 crore. Now, if any one of the criteria, either the investment or the turnover is exceeding the upper limit, we have to shift it to the next category. So now it cannot be listed as a micro enterprises. It is a small enterprise. So very good. Kamal C is the correct answer. Right? Now, if you have any doubt here, kindly ask. If you have any doubt here, please feel free to ask your doubt, everyone. Done? Next question. A company has the following data. GDP MP is given, depreciation is given, FDIA is given, indirect taxes is given, government subsidies is given. Now you have to tell me what is the national income in this economy. You have to tell me what is the national income in this economy. Means we have to calculate the net national product at factor cost. Everyone, ma'am, it reverse happens. See, Ananya, for reversing, you don't have to meet both the criterias. For example, there is a small enterprises. And for any year, if the small enterprises haven't met both the limit, means both the investment and turnover, they haven't touched both the limit, then they have to be shifted into the lower version. For shifting in the lower version, you don't have to meet both the criteria. For upgrading, you have to exceed only one of the criteria. Okay, done, Ananya? Now here tell me the correct answer, everyone. NNP at FC. We have to calculate the net national product calculated at factor cost, everyone. Please answer this question. We have to calculate the NNP at FC, net national product calculated at factor cost. Everyone, please answer. First of all, we need to learn the formula. Okay, so see, GDP MP, gross domestic product at market price is given. We have to calculate the net national product at factor cost. First of all, what is the formula? What is the formula? We have to first convert gross into net. So gross into net, the formula was gross minus depreciation is equals to net. right? We have to convert domestic product into national product. Now, domestic product into national product, we have to add net foreign income from abroad. Then we have to what? Market price to factor cost. Market price to factor cost. We have to what? Minus net indirect tax. Okay. Now here, see. First of all, indirect taxes and government subsidies are there. So net indirect taxes is equal to indirect taxes minus government subsidies. 150 minus 50, it is 100, right? So GDP MP is 2500 minus depreciation is 200 plus NFIA is 100 minus net indirect taxes is 100, right? So if we talk about the correct answer, 2300 is the correct answer. C is the correct answer. Good. Good, everyone. C is the correct answer. Any doubt in this question? If you have, please ask. If no doubt, please give me a thumbs up, everyone. RK, what you want to repeat me? This was the three formulas. If you all remember, I have told you in the class. Gross domestic product plus net factor income from abroad is equals to gross national product. Second, gross minus net is equals to depreciation. Then factor cost plus net indirect taxes is equals to market price. Based on these three formula, I have made this conversion, the formula. Then I have put the value and then it is answered. Simple. Okay. Next. Queenery sector is a part of agriculture, service, industrial or foreign sector. Queenery sector is a part of what? Queenery sector. Everyone. Queenery sector is a part of what? Everyone please answer. Queenery sector is a part of what? Yes. So see, we have primary, we have secondary, and we have tertiary sector. Okay. So queenery sector, queenery and quaternary. These are the two sectors, queenery and quaternary. These are the part of tertiary sector. So service sector. Yes, B is the correct answer. Yes, B is the correct answer. Next question. Which of the following formula is correct? We have to choose the correct formula. Factor cost plus indirect tax minus subsidies equals to market price. Factor cost minus indirect tax plus subsidies is equals to market price. MP minus depreciation is equals to factor cost. MP plus depreciation is equals to factor cost. Tell me the correct answer. Very simple. Now tell me the correct answer. Which of the following formula is correct? Here, we have to choose the correct answer, everyone. Which of the following formula is correct? Here, everyone. Tell me the correct answer, guys. Factor cost plus indirect taxes minus subsidies is equals to market price. Factor cost minus indirect taxes plus subsidies is equals to market price. Factor cost minus depreciation is equals to factor cost, or market price plus depreciation is equals to factor cost. So the correct answer is Ananya is saying B, RK is saying A, Kamal is also saying A. Again, you are all confused. Factor cost plus indirect taxes minus subsidy is equals to market price. This is the correct answer. Factor cost plus net indirect taxes is equals to market price. Factor cost plus net indirect taxes is indirect taxes minus subsidies is equals to market price. We open the bracket. Factor cost plus IT minus subsidy is equals to market price. So the correct answer is A, right? Next question. Consider the following statement about the foreign exchange retail platform. The platform imposed transaction charges on all the trades regardless of the transaction value. Only banks are eligible to participate in this platform. Foreign exchange platform, we have to choose the correct statement. Everyone. Everyone. Please answer this question. We have to choose the correct statement here. Foreign exchange platform. Choose the correct statement regarding the foreign exchange platform. Everyone. The platform imposes transaction on all trades regardless of the transaction value. Only banks are eligible to participate in this platform. Everyone, please answer. Okay. So first of all, the platform imposes transaction charge on all the trades regardless of the transaction value. No, the foreign exchange platform imposes the transactions value if your transaction exceed $50,000 in one day. If it exceed this value, then only it is going to impose the charges, else it is not going to impose the charges. Only banks are eligible to participate in this platform. No, guys, only banks are not eligible to participate in this platform. In this platform, various other participants are allowed, like a small institutional investor, retail investors. These are all allowed. So second is also wrong. So if we choose the correct answer, neither one nor two. D is the correct statement here. D is the correct statement here. Good. Next question. Which of the following statement regarding RBI is correct? Reserve Bank of India. RBI commenced business on 1st April 1949 with a paid-up capital of 10 crore. RBI was established as a private bank with a paid-up capital of 5 crore. Commenced operation on 1st April 1935. RBI was nationalized in year 1950. RBI was established in 1934 and commenced operation in 1936 with a paid-up capital of 5 crore. We have to choose the correct statement regarding RBI. Choose the correct statement regarding the Reserve Bank of India. Everyone. Just choose the correct statement regarding the Reserve Bank of India. So, which of the following is the correct answer? We have to choose the correct statement regarding the Reserve Bank of India. RBI is nationalized in 1950 with a paid up capital of 1 crore. Again, read out the question. Kamal is saying B. Ananya B. Right? So, RBI, Reserve Bank of India, was actually established as a private bank. Yes. It has a paid up capital of 5 crore. Commences operation on 1935. Yes. Act has been passed in 1934. Recommendation by Royal Hilton Young Commission 1926. Nationalization has been done in 1949. Right, so these are the important dates. Earlier, RBI's headquarter was in Kolkata, then it has been shifted to Mumbai permanently. So if we talk about the correct answer, B is the correct answer. Okay, this is a PYP actually. This is a PYP, everyone. Okay, next question. A bank research team is analyzing the impact of interest rate change on the investment decision during an economic slowdown. The team assumed that the reduced interest rate will significantly boost investment and saving. However, one economist in the team point out that this may not hold true on the Keynes theory, which suggests that investment is more influenced by the other factor. So, based on the Keynes criticism of the classical theory of interest, which of the following best explain the economist view? Keynes believed that lower interest rate directly increase investment and saving in all economic conditions. Keynes argued that investment decisions are primarily influenced by the marginal efficiency of the capital and future expectation rather than the interest rate. Keynes saving are highly interest elastic and tends to increase significantly with the rising interest rate. Keene emphasized that the interest rate are purely a reward for saving and reducing them will always lead to the higher investment. You have to tell me the correct answer. Everyone. Everyone kindly please answer this question now. This is an easy question. Everyone start answering this question. A bank research team is analyzing the impact of interest rate on the investment decision. During an economic slowdown, the team assumes that reduced interest rate will significantly boost the investments and saving. However, one economist in the team point out that this might not hold true based on the Keynes theory. So Keynes argues that according to the Keynes, the investment and the savings they are rarely interest elastic. First of all, according to the Keynes, the investments decisions or the saving decisions they are rarely interest elastic. Okay, there are more decisions actually. In Keynes says that if you are going to invest, it is more based on the marginal efficiency of the capital and the future expectation rather than on the interest rate. So if we talk about the correct answer, B is the correct answer. Everyone done? Clear? Next question. According to the which section cash reserve ratio and statutory liquidity ratio is covered? This is a PYP. Everyone, tell me the correct answer. Under which section of the respective act CRR and SLR is governed? Cash reserve ratio and statutory liquidity ratio. Everyone, please answer. Now you have to tell me the correct answer. Good question. This is a PYP, previous year question. This is a PYP, previous year question. Everyone start answering the question, guys. Okay. So, CRR is section 42 of Reserve Bank of India Act. Cash reserve ratio means every bank has to reserve a fixed percentage of its total deposit with RBI in form of cash only. That is called as cash reserve ratio. And a statutory liquidity ratio says that every bank has to reserve a fixed portion of its total deposit and that with themselves, and it can be in any form, sorry, either in cash or in non-cash. That is called as a statutory liquidity ratio. So bank has to maintain the statutory liquidity ratio according to the section 24 of Banking Regulation Act, and bank has to maintain the cash reserve ratio according to section 42 of Reserve Bank of India Act 1934. RBI Act passed in 1934, Banking Regulation Act passed in 1949. Very important question. This is a PYP. Okay. A is the correct answer. Next, consider the following statement regarding the financial criteria prescribed by RBI for setting up the what? For setting up the trade receivable discounting system. The minimum paid up capital required for TREDS entity is 50 crores since it handle the trade receivable financing. TREDS entities are permitted to assume limited credit risk subject to the RBI approval. No entity other than the promoter can hold more than 10% of the equity capital of the TREDS platform. Overall financial strength of the promoter is one of the key factors considered for selection. Which of the following statement is or are correct? Everyone. Which of the following statement is or are correct? Again, important question, good question. You have to answer this question. Everyone, whoever are watching this video, kindly please like and share the video to the maximum you can and tell me the correct answer here. Tell me the correct answer here. Everyone start answering this question. Threats. Trade receivable discounting system. Threats. Trade receivable discounting system. Okay. The minimum paid up capital requirement for a trades entity is 50 crores since it handles the trade receivable financing. Wrong. It is not 50 crore, it is 25 crore. Trades entities are permitted to assume the limited credit risk. No, they are not allowed to take any credit risk. No. No entities other than the promoter can hold more than 10% of the equity capital of the trade platform. Correct. The overall financial strength of the promoter is one of the key factors considered for the selection. Correct. So if we talk about the correct answer, third and fourth are the correct statement. First and second are the wrong statement. So C is the correct answer. Clear? Everyone sees the correct answer. Next question. Which of the following statement regarding government initiative to boost communication infrastructure in India is or are correct? The FDI cap in the telecom sector has been increased to 100% from 74%. Production linked scheme for large scale electronic manufacturing was approved by government in 2020. The Department of Telecommunication include Tarang Sanchar, a web portal, provide information on broadband connectivity speed across India. We have to choose the correct statement here, everyone. We have to choose the correct statement here, everyone. We have to choose the correct statement, guys. Everyone kindly answer this question. We have to choose the correct statement here. The foreign direct investment cap in the telecom sector has increased to 100% from 74%. Yes, that is correct. The production linked incentive scheme for large scale manufacturing has been approved by government in 2020. Correct. The Department of Telecommunication launched Tarang Sanchar, which is a web portal providing information on the broadband connectivity speed across India. No, Tarang Sanchar portal is actually for measuring the mobile tower radiations, not for the broadband connectivity. Okay, it for this it is BBNL which has been launched. So statement third is wrong. First and second are correct. So A is the correct answer. Yes. A is the correct answer, everyone. Done? Any doubt? Good. Next question. Calculate the insurance density here. Insurance density. GDP 500 trillion. Gross value added. GVA 400 million trillion. Population is 100 million. Insurance premium is 2 trillion. We have to calculate the insurance density here. Insurance density, everyone. Insurance density. Everyone, please answer this please answer this question. Please answer this question, guys. So the correct answer is what? Very easy, very simple question. Insurance density. What is insurance density? Now you have to answer insurance density is equals to premium to population, first of all. Okay. You don't even have to calculate. It is 2 trillion, 100 million. So 100 million, I'm saying that 1 के आगे 8 zero लगा लो 100 million. 2 trillion is 2 के आगे 12 zero लगा दो. But you don't need to calculate this. If we divide by 2, most obvious answer is a 2 divided by 100. It cannot be 15 or 10 or 25. It is 20,000, right? So A is the correct answer. You don't even need to calculate this. Simple, by common sense, you can all answer this question. You just have to remember what is insurance density. It is premium to population, okay? Right? Next, which of the following statement according or regarding the liquidity adjustment facility is correct? LAF. LAF is a tool used by Reserve Bank of India to manage the liquidity in the banking system by adjusting the cash reserve ratio. Under the LAF, the RBI conducts repo and reverse repo operation to inject and absorb liquidity. LAF is generally used to control the long-term interest rate and manage the inflation in the economy. We have to choose the correct answer. Liquidity adjustment facility. Choose the correct answer. Liquidity adjustment facility, guys. Please choose the correct answer, everyone. Liquidity adjustment facility, guys. LAF. So LAF is a tool. LAF is actually a tool used by Reserve Bank of India to manage liquidity in the banking system by adjusting the cash reserve ratio. No. Liquidity, LAF actually include repo rate and reverse repo rate. LAF actually include the repo rate and the reverse repo rate. Okay, so first cannot be the answer. Second, LAF, the RBI conduct reports and reverse repos to absorb and inject liquidity. True. LAF is generally used to control the long-term interest rate. No, it is used to control the short-term lendings. Okay. So only second is the correct statement. C is the correct answer. Only second is the correct statement. C is the correct answer, guys. Done. Done, everyone. Yes or no? Okay. Next question. Pink revolution is associated with what? Poultry, agriculture, pharmaceuticals, or none of the above. Pink revolution is associated with the production of what? Everyone. Easy. Pink revolution. Pink revolution in India is associated with the production of poultry, agriculture, pharmaceuticals, or none of the above. Tell me the correct answer. Yes. So pink revolution, it is related to pharmaceuticals. This is also a PYP, guys. Okay. Agriculture green revolution. Remember, egg silver revolution. Okay. Done. Yeah. Next. As per Reserve Bank of India Act, the maximum denomination of the currency note that can be issued in India is, this is again a PYP. The maximum denomination of the currency note that can be published is what? Everyone. As per RBI Act, the maximum denomination of the currency note that can be issued in India is what? 5,000, 10,000, 20,000, or 50,000, everyone. Answer. Yes, Ananya. And everyone else, kindly please answer this question. I want an answer from each and every one of you. Why you are not answering here? Okay, so yes, it is 10,000 B is the correct answer. Next question. You have to choose the correct statement here. Bank assurance is actually defined as the selling of insurance product through NBFCs only. The concept of bank assurance has the root in France. It commenced in India in the year 2000, where the government issued a notification under the Banking Regulation Act, which allowed Indian Bank to undertake insurance distribution business. We have to choose the correct statement regarding the bank assurance. We have to choose the correct statement regarding the bank assurance. Everyone, just choose the correct statement regarding the bank assurance. Everyone. We have to choose the correct statement regarding the bank assurance. Everyone, please answer this question. Hmm. Second and third, you are saying correct, Ananya. And everyone else, please answer this question. Bank assurance. So, bank assurance is defined as selling of the insurance product through non-banking financial companies only. No, bank assurance are defined as the selling of the insurance product through bank, NBFCs, etc. First is wrong. Concept of bank assurance root in France, correct. It commenced in India in year 2000, not 2010. So it is wrong. So if we talk about the correct answer, only second is the correct statement. D is the correct answer. No one is correct here. D is the correct answer. Okay. Next, which of the following is not included in the monetary policy framework of RBI? Not included in the monetary policy framework of Reserve Bank of India. Not included in the monetary policy framework of Reserve Bank of India. Everyone. Which of the following is not included in the monetary policy framework of Reserve Bank of India? Please answer. See, repo rate, yes. Repo rate, the rate at which RBI is giving short-term loan to the commercial bank. Reverse repo rate, the rate at which RBI is receiving short-term loan from the commercial bank. Bank rate, the rate at which RBI is giving long-term loan to the commercial bank. Exchange rate, yes, it is not included in the monetary policy framework. So obviously D is the correct answer. Yes. Next question. Consider the following statement regarding the recent initiative in the Indian railway sector. The one station, one product concept aims to help local business and supply chains. 200 PM Gati Shakti cargo terminal for multimodal logistic are to be developed during the next 3 years. 400 new generation Vande Bharat trains are planned to be manufactured during the next 3 years. Which of the following statement is or are correct? We have to choose the correct statement. Indian railway sector. The initiative regarding the Indian railway sector. Everyone, please answer. Please answer this question. It is regarding the initiative in Indian railway sector. Everyone, kindly please answer this question. It is regarding the initiative in the Indian railway sectors. Everyone. Okay. The one station, one product concept aims to help local business and supply chains, right? 200 PM Gati Shakti terminals, no. 100 PM Gati Shakti terminals, wrong. 400 new Vande Bharat, yes, 400 I think is correct, right? So first and third are correct. So if we talk about the correct answer, B is the correct answer. Done. Clear? Next question. ESG is the modern dimension of which of the following? P by P. ESG is the modern dimension of financial accounting, corporate governance, corporate social responsibility, or environmental science. ESG is a modern dimension of which of the following? Everyone. Everyone, kindly please like and share the video to the maximum you can. Everyone, please like and share the video, guys. ESG is considered as the modern dimension of which of the following? Everyone. Yes, it is corporate social responsibility. Next, a multi-cap fund is characterized under which type of mutual fund? P by P again. A multi-cap fund is actually a which type of mutual fund? Debt, equity, hybrid, or index? Multi-cap fund. Multi-cap fund. No, no. Multi-cap fund. It is a equity fund. It is a which type of mutual fund? If we talk about the multi-cap fund, it is an equity fund, right? So B is the correct answer. It is a equity fund. Good. Next question. Multi-cap fund is a equity fund, everyone. This is a PYP in fact, okay? Now, which committee's recommendation lead to RBI's issuing guideline to the credit institution to become the member of all credit information company? Tell me the correct answer, everyone. Very simple. All credit institutions should become the member of all credit information companies. It is Aditya Puri Committee's recommendation. Next. Consider the following statement regarding the command economy. In a command economy, the government owned most of the means of production, such as land and capital. The private sector has a significant control over production and distribution decision. In command economy, the government plays a role in deciding how the goods and services are distributed. We have to choose the incorrect statement. Regarding the command economy, we have to choose the incorrect statement, guys, everyone. Easy. Command economy. Please answer this question. We have to choose the incorrect statement. Kamal, Ranveer, RK, and everyone, we have to choose the incorrect statement here. Consider the following statement about command. Achha, command economy, it is also called as capitalist economy. First of all, clear this doubt. It is also called as capitalist economy. Means there is a dominance of the private sector. Means there is a dominance of private sector. So in a command economy, the government owns most of the means of production. No. Private sector has a significant control. Yes. In command economy, government plays a major role. No. First and third are incorrect. We have to choose the incorrect statement, huh? So B is the correct answer. We have to choose the incorrect statement. So B is the incorrect one. Okay. Last question. Okay. Last question. Which of the following sequence in the decreasing order of the contribution in GDP? Decreasing order of contribution in GDP. Everyone, decreasing order of contribution in GDP. Tell me the correct answer. This is the last question. Everyone. Decreasing order of contribution in the GDP. High, then low, then low. Decreasing order of contribution in the GDP. Everyone. So obviously most is the industrial, top service, not industrial. Second is the industrial and last is the agriculture. Okay, so A is the correct answer. Okay. Yes, A is the correct answer. Done, everyone. First of all, we know that what are the different categories of the priority sector. Okay. So we have agriculture sector because lending in the agriculture sector is termed as a priority sector advance. We have MSME. Now the updated definition of micro, small and medium enterprises. This also is very important. So in this year, micro, small and medium enterprises, the definition has been updated and we have already discussed these definition in the last class. Okay. Then export credit, then we have education, we have housing, we have social infrastructure, we have renewable energy, and we have others. So these are the different categories of the priority sector. Okay. Now let's talk about the updated target which has been given to the priority sector. So first of all, for total 8 categories of the priority sector, there has been given 40% target. Okay, for the total priority sector, 40% of either the adjusted net bank credit or credit equivalent of balance sheet exposure, whichever is higher. Okay, so first there is a total priority sector for all the gross domestic commercial bank and foreign bank which have 20 plus branches. For them, 40% of A and BC or COB, whichever is higher is the target. For the foreign banks which have less than 20 branches, again 40% of A and BC or COB, whichever is higher. And in this 40%, up to the maximum of 32% they can give in the form of export credit. Okay, and export credit cannot be less than 8%. Okay, now, next is the regional rural bank. For all the regional rural banks, 75% of ANBC or COB, whichever is higher. Then for all the small finance bank, again 75% of ANBC or COB, whichever is higher. So this is the total priority sector target which has been given to each and every commercial bank, small finance bank, foreign banks which have less than 20 branches, and for those who have more than 20 branches. Then for agriculture sector, so for this it is 18% and it is not applicable to those foreign banks which have less than 20 branches. For all the regional rural bank, it is again 80% of ANBC or COB, whichever is higher. And for the small finance bank, it is again 18%. Okay. Now, under the small finance bank, under 18%, you have to give at least 10% to the small and marginal farmer. Now, who are small farmers and who are marginal farmer? Small farmers are those farmers which have a land holding of between 1 to 2 hectare. And marginal farmers are those farmers which have a land holding of up to 1 hectare. Okay. For RRBs also, in this 18%, 10% target is actually given to the small and marginal farmer. Then for micro enterprises, it is here 7.5%. It is not applicable here. Again, it is here 7.5% and it is 7.5%. For advances to the weaker section, 12% here, 15% to the regional rural bank, and small finance bank, it is again 12%. These are the updated target which are very, very important for all of you. Everyone, kindly just please like and share the video to the maximum you can. At least who are watching this session, you have to like the video. Whoever are watching this session, just like and share the video. Okay, now let's talk about the category wise. So if we talk about the category wise, the most important thing or the most important thing which are included in the priority sector is what? First of all, these are some of the key points which you need to note. First of all, what is the weight for district with low PSL per capita? So if there is any district which have the low priority sector lending per capita, so what is the weight of percentage for PSL for that district? So it is 125%, again important. What is the threshold that is defined for high credit district? It means that if there is a PSL lending which are high in a particular area, then for them what are the threshold limit? So it is up to the maximum, or it is more than 42,000 per capita priority sector flow. Okay, so if there is a high credit district, for them more than 42,000, if per capita priority sector lending is more than 42,000, then that district is considered as a high credit district. Okay, now what are the key banks which are exempted in this high credit district? That is regional rural bank, united or urban cooperative bank, local area bank, and foreign banks, right? Validity period, so this time the priority sector has been announced, and it has been announced for the financial year 2026 and 2027. Okay, now these are some of the important things which you have to note. Most important points I am highlighting here. Okay, first, agriculture sector. Now, in agriculture sector, remember, if the loan has been given for any agriculture and allied activities like the loan has been given to the farm development, machinery, the loan, the Kisan credit card, the loan which is given for the purchasing of agriculture land, the loan which is given for the agriculture produce. So these are all considered under the priority sector lending. And remember, if the loan is given for agriculture sector produce, the maximum limit is 90 lakh rupees here and 60 lakh for the others category. If the loan has been given to the small and marginal farmers only for the purpose of the agriculture land, right, then this is again considered as the priority sector lending. Now here in the farm credit, 4 crore, loan up to 4 crore for the crop and agriculture activities. These are considered as the priority sector. Okay. Now loan 10 crore for the farmer produce organization, FPO. So if you are giving the loan is 10 crore here, right? Then up to 10 crore is considered under the farmer producer organization, that is considered as the priority sector advance. Okay. Now, remember, UCBs, urban cooperative banks, these are not allowed to permit, or these are not permitted to lend to the farmers, cooperative farmers. Okay. So here, these important updates, these are very, very important for all of you. Okay. Now, for agriculture sector infrastructure, what is considered as the priority sector? So if any loan is given for the development of agriculture infrastructure, then for that loan to up to rupees 100 crore per borrower is considered as the priority sector advance. Okay. So for agriculture infrastructure, it is up to 100 crore per borrower. Then for different ancillary services, if you are an agriculture startup, loan up to rupees 50 crore is considered as the PSL. For food and agro processing, loan up to 100 crore is considered as the priority sector advance. Now you know that what is the definition of a small and marginal farmer. Small and farmers are those farmers which have a land holding between 1 to 2 hectare, and marginal farmers are those farmers which have a land holding up to 1 hectare, right? Now here, if the loan is given to any self-help group, joint liability group, and this loan is up to rupees 2.5 lakh for any of the allied activities, that is considered under the priority sector advances, right? So these are all the updated borrowers lending. Now this is also very important. So if the loan is given by any non-banking financial companies and microfinancial institution, loan up to rupees 10 lakh per borrower is eligible as a priority sector advances in the agriculture field. So 10 lakh per borrower is actually the updated figure for on lending in the field of agriculture by non-banking financial companies, microfinance institution. Clear? Now for MSME, micro, small and medium enterprises, for manufacturing, for MSME startups, all loan if the amount is up to rupees 50 crore, that is considered as the priority sector advance. Khadi and village industries, factoring services, on lending to micro, small, and medium enterprises. Now, in all lending means if the bank is giving money to non-banking financial companies, microfinance institution, and then they are providing loan to the MSME, then for them, 20 lakh rupees per borrower is considered as the priority sector advance. Okay. So as such, every startup, if the loan amount is 50 crore per, that is considered as the priority sector advance, especially for the on lending purpose, the loan up to rupees 20 lakh per borrower in the field of MSME, it is considered as the priority sector advance. Okay. Now, for the export credit, the maximum can be 50 crore per borrower. It can be considered under the priority sector advance. Clear? So for export credit, remember 50 crore per borrower, it can be considered under the priority sector advance. Now, for educational purpose loan up to rupees 25 lakh per borrower, it is again considered as the priority sector advance. Okay. These words, these important credit limits are very, very important for you all guys. Very important. Okay. Now, next, housing loan. Now, for housing loan, I have just given you the maximum loan amount and maximum house code. Now, this is not very important, especially for IEIFS. This is not very important. This is very important in PPB. Okay, so area wise population, the maximum loan amount that can be given, and what should be the maximum house cost. This is given here. You can just read it out. It is not very, very important, especially for the IEIFS, but it is very important for the PUB. Okay, now this is very important. See, social infrastructure, this is very, very important. Why? Because social infrastructure is one of the very important part of IEIFS. So if the loan is given to the school, sanitation or safe drinking water, maximum loan limit can be 8 crore. This is considered under the priority sector advance, very important. For health facilities, okay, then it is considered as loan up to rupees 12 crore, that is considered as the priority sector advance. Okay, so there is school and sanitations for them. A 8 crore loan limit is considered as the priority sector advance, and for health facilities, loan up to 12 crore is considered as the priority sector advance. Renewable energy, again, very important for all of you. For renewable projects like street lighting or village electrification, 35 crore per borrower is considered as the priority sector advance. And for individual household, up to rupees 10 lakh is considered as the priority sector advance. Okay, very important. Okay, Kamal, Sunil, and everyone, see, this is the last minute revision I am giving you for the PSL updated targets. Okay, a lot of questions I have framed for in this session for the priority sector advances so that you can just learn it out from there. Okay, done. Now, after the social infrastructure, let's talk about the next other categories. Okay, so microfinance loan, you know that what is a microfinance loan? Microfinance loan means those loans and financial services or credit facilities which are provided to the lower income category. Lower income category means whose annual average income is approximately 3 lakhs per borrower. Okay, no, average annual income is approximately 3 lakh per annum. Now, for the self-help group and joint liability group, the loan can be given for non-agriculture or MSME activities. It can be up to the maximum of 2 lakh. For distressed non-farmers, loan up to rupees 1 lakh. It is considered under the priority sector advance. For a startup, if you are a non-agriculture or non-MSME startup, loan up to rupees 50 crore is considered as the priority sector advance. Okay. Now, for the weaker section category, if you are a small and marginal farmers, again, up to rupees 2 lakh, it is considered under the priority sector. For SC, ST or women, it is up to rupees 2 lakh, which is considered as the priority sector. Okay. So these are all the priority sector updated target, which is actually very important for all of you. Okay. Now, let's talk about what? Let's talk about all the committees which are very important. Okay. Now, committees PDF I have already circulated to all of you, but still I am giving you a last minute revision for all the important committees. In this also, I am just taking mark the most important committees for all of you. Okay. First of all, Chakravarti committee is very important, which is on the monetary policies. Okay. And on Chakravarti committee, year has been 1985. Okay, and it is regarding improving the monetary policy and banking sector efficiency. Okay, then we have Narsimha committee. Now, Narsimha committee phase 1, very important committee, year 1991. Again, different recommendations which has been there. Padmanabhan Committee, very, very important committee, 1996, and it is for banking supervisions. Okay. Then we have Narsimha Committee phase second, very important, 1997. And in this, universal banking concept has been introduced. So remember, which committee has given you the recommendation of Narsimha Committee, and with which phase it, or universal banking, and in which phase it is the Narsimha Committee which gives you the recommendation of universal banking. Verma Committee, it is for the weak banks. Important, 1998. RH Khan Committee, important, 1998, for the harmonizations of banks and financial institutions. Chakravarti Committee, it is for digitalization. Okay. Then Kelkar Committee, it is regarding the FRBM amendments. Remember this, important. Vijay Kelkar Committee, this has been introduced for Fiscal Responsibilities and Budget Management Act. Okay, so for the amendments in the FRBM Act, there was the Kelkar Committee. NK Singh Committee, again it is for FRBM. Okay, now in this, debt to GDP ratio we have to maintain by 60%. Important. This is very important for all of you. Okay, now obviously, Hilton Young Commission, this is important. This actually give you the recommendation of RBI. So Reserve Bank of India has been established by the recommendation of which committee? Hilton Young Commission. Okay. Then we have More Committee. More Committee is for the payment banks, small finance bank, and financial inclusion. Then we have PJ Nayak Committee, Banking Board Governance, very important. Then we have the Rangarajan Committee. Now, Rangarajan Committee give you the recommendation for establishment of the National Housing Bank. So, NHBs has been established by the Rangarajan Committee's recommendation. Universal banking has been introduced by Narasimha Committee's recommendation. Okay. Now, Shiv Raman Committee, this actually helps the recommendation of or establishment of NABARD, National Bank for Agriculture and Rural Development. Okay. Malegam Committee, very important. NBFC MFI has been created by the Malegam Committee's recommendation. James S. Raj Committee for NBFCs. AC Shah Committee, it is for again NBFC's regulation. Anand Malhotra Committee, insurance sector. Sodhani Committee, it is for the foreign exchange market. So Sodhani Committee for the foreign exchange market. SS Tarapur Committee, it is again for FEMA, Foreign Exchange Management Act. LC Gupta Committee, by LC Gupta Committee's recommendation, derivative has been introduced in India. Okay. Then we have the Mutual Fund and Advisory Committee. So this committee has actually given that we have the sixth level of mutual fund risk. Okay. We have Siddiqui Committee, which help in the establishment of CIBIL. Aditya Puri Committee, Credit Information Companies. The Hotre Committee, it is for the leasing company. Law Commission, it was for the hire purchase law, and then Vishwanathan Committee for the United Commercial Banks. So these are all the important committees. Now, guys, again and again, I am saying that please note that these are very, very important for your examination. All the committees, these are very important for your examination. All the updated priority sector advances, these are again very important for your examination. Clear, everyone? Done? So now, let's start doing the practice question, everyone. Can we start the practice question then, guys? Everyone, kindly please like and share the video to the maximum you can. Everyone, whoever are watching this video, kindly please like and share the video to the maximum you can. And can we start doing the practice question, everyone? Okay. Let's start the practice question with the very first question of the class. You have to describe what is home charges. Home charges referred to as what? Taxes levied by the East India Company on Indian peasants. Transfer made by the British government to India for administrative purpose. official remittance made from India to Britain for the expenses like pensions, dividend, and administrative cost. Expenses incurred on Indian princes residing in Britain. What are considered as home charges every month? So Sunil is saying D. Kamal is saying C. And everyone else, kindly please start answering this question. You have to describe what is home charges. Home charges are what? Everyone start answering the question. So we have the answer. Sunil is saying C. Sunil is saying A. Kamal is saying C. Harsh is saying C. So if we talk about the correct answer, yes. Home charges, these are the official remittances which are made from India to Britain in the form of pensions, in the form of dividend, in the form of administrative costs, like for example, the salaries which are given to the viceroys, all the interest which has been paid for the debt which has been taken for the Britain, these are all considered as the home charges. Okay, done? Right, C is the correct answer. Next question. Consider the following statement about REITs and real estate mutual fund. Now, we have given the four statements regarding the difference between the REITs, real estate investment trust, and real estate mutual fund. You have to identify which of the following statement is incorrect. Both REIT and REMF, real estate mutual fund, allow investor to gain exposure to the real estate, but only REIT are mandated to distribute a major portion of their income as the dividend. REIT are usually in a listed debt instrument backed by the property, whereas mutual fund invest only in the physical real estate asset. During inflationary period, REIT investor may benefit from the higher rental yields and property value appreciation, whereas a real estate mutual fund doesn't enjoy such benefits or advantages. Now, REIT offer less diversification but higher annual payouts compared to the real estate mutual fund. Now, we have to choose which of the following statement is or are incorrect. We have to choose the incorrect statement here. Everyone, we have to choose the incorrect statement here. Everyone, kindly please like and share the video to the maximum you can. Just like and share the video to the maximum you can. Now we have to choose the incorrect statement regarding the REITs and real estate mutual funds. So the correct answer is what? Harsh, Sunil, Kamal, everyone start answering the question. Okay, so Harsh is saying C. Third and fourth are the incorrect statements. Okay, KGR is saying A, means second and third are the incorrect statement. And everyone else, kindly please answer. Harsh is saying B. First and fourth are the incorrect statement. Okay, now let's talk about this. Both REITs and real estate mutual fund allows the investor to gain exposure to the real estate. But only REITs are mandated to distribute a major portion of income as the dividend. That is considered correct because in REITs, this is mandatory that you have to distribute at least 90% of your income to the unit holders of the REIT, where there is no such compensation or in the mutual fund, right? Now, next. REITs usually invest in listed debt instrument backed by the property, while mutual fund only invest in the physical state. Or wrong. It is the mutual fund, real estate mutual fund, which actually invest in the listed debt instrument backed by the properties. Whereas for the REITs, they actually invest only in the physical real estate. So second is wrong. Now third, during the inflationary period, REIT investors may benefit from higher rental and property value appreciation, while mutual fund doesn't enjoy any such advantage. That is also wrong. When there is an inflation, REITs and real estate mutual fund both will get the advantage of the inflationary period. In both, in the REITs, the value of the property is rising, whereas in the mutual fund, the unit price is rising. So if you are saying that one will receive the benefit and another one is not receiving the benefit, incorrect. Both are receiving the benefit. Now, third, REITs offer less diversification but higher annual payouts. Yes, that is correct in comparison to real estate mutual fund. So, first is correct, second is wrong, third is wrong, fourth is correct. So, second and third, these are the incorrect statements. So, yes, A is the correct answer, everyone. A is the correct answer now. X, Ranveer. Yes, you are all correct. So, yes, A is the correct answer, everyone. Done? Done, you guys? Clear? Can we move to the next question, everyone? Can we move to the next question? Good. Next question. See, in macroeconomics, the IS investment saving liquidity preference money supply model represent the equilibrium between the goods market and the money market. Now you have to tell me, according to this IS and LM curve which are derived, which of the following theoretical approach is correct? IS curve is from Keynes theory. LM curve is from classical theory. IS curve from classical theory. LM curve from the Keynes theory. IS curve monetary theory. LM curve fiscal theory. IS curve supply side. LM curve demand side. So we have to tell the correct answer, everyone. Very easy, very simple. You can all answer this question. It is very simple. ISLM curve, investment saving, liquidity preference money supply model. Which of the following statement is correct regarding this? Everyone start answering this question, guys. So the correct answer is what? Everyone. What is the correct answer, everyone? So please tell me the correct answer. ISLM model. Which of the following is correct? This is very important question, and I have told you in the class also when I am teaching the theories of interest topic. You remember I've told you that this is a very important portion. Okay. So now Sunil is saying B, Harsh is saying B, Kamal is saying B, KGR is saying D. Ah, yes, investment saving curve. This actually derived from the classical theory. And liquidity preference money supply curve. This actually derived from the Keynes theory. So B is the correct answer for this question. Yes, B is the correct answer for this question. Okay, done. Now next. Consider the following statement about the boom phases of the business cycle. We have to consider the following statement regarding the boom phases. During boom phases, both the level of production and employment rise and the economy operates beyond its full capacity. Rising wage and prices during the boom ensure that the purchasing power of the salaried class improve, leading to the sustained consumption growth. Increased income during the boom may eventually faces diminishing return as the production cost rises and the demand stagnates. The boom phase is often characterized by the seller's market and inflationary pressure. So we have to choose which of the following is the correct statement regarding the boom phase. We have to choose the correct statement regarding the boom phase. Everyone, please answer. Correct statements, everyone. Just tell me the correct answer. Okay, so Ranveer is saying B. First and second only are correct. Just understand the points carefully of the boom phase and then you have to answer. Just understand the statements carefully and then answer. Everyone, understand the statements carefully and then you need to answer. Everyone, Okay, Sunil is saying A. Here the following is correct about the boom phase. During the boom phase, both level and employment rises and the economy operates beyond its full capacity. Correct. Rising wage and prices during the boom ensure that the purchasing power of the salaried class improve. False. During the boom phase, actually the salaried class lost their purchasing power. Why? Because the inflation is rising, but their salary is not rising proportionately to the inflation. And if the salaried class, their salaries are not increasing according to the inflation in the economy, they will have actually the low purchasing power. So, second is wrong. Third, increased investment during the boom may eventually face a diminishing return. Yes, that is correct. Fourth, in the boom phase, because of a different high level of production and employment and higher profit, sellers market and inflationary pressure arises. So first is correct, second is wrong, third is correct, fourth is correct. We have to choose the correct answer. A is the correct answer, everyone. Done? Clear? Clear, everyone? Yes or no? Any doubt here? If you have any doubt, please ask. No doubt, give me a thumbs up. Clear? Done? Can we move to the next question? Yes. Okay, next question. The NK Singh Committee 2016 has been set up to review which of the following Act? FRBM Act, GST Act, Companies Act, or Insolvency and Bankruptcy Code, IBC. Everyone start answering this question. The N.K. Singh Committee 2016 was set up to review which of the following act? Just choose the correct answer here. Everyone, please start answering the question. N.K. Singh Committee actually was set up to review which of the following act? So the correct answer is now Ranveer Singh B. And everyone else, now, this is again an important question, guys. This is again an important question. Vineet is saying FRBM, yes. I have told you FRBM Act, NK Singh Committee, FRBM Act, if you remember here. NK Singh Committee, I have told you the NK Singh Committee here also, right? And it is regarding the FRBM Act, NK Singh Committee, FRBM Act, right? So very important is NK Singh Committee, okay? So this is the Fiscal Responsibility and Budget Management Act, clear? Next question. Consider the following statements regarding the capital receipts in the union budget. Okay, so I have explained you the union budget in the last class. Recoveries of the loans and advances and disinvestment receipts are the example of debt capital receipt, market borrowing and securities against a small saving. These are considered as the debt receipt. Non-debt receipt does not create any future repayment liabilities for the government. We have to choose which of the following statement is correct regarding the capital receipts. Everyone, which of the following is the correct statement? Everyone, please answer this question. Very easy. You can all answer this question. Again, it is very easy. You can all answer this question. Everyone. Consider the following statement about the capital receipts. See, first and third are the correct statement. Okay. Then tell me what is wrong in the second statement. If you are saying first and third are the correct statement, tell me what is wrong in the second statement. First of all, what is a capital receipt? We know that any those receipts which either increases the financial liabilities of the government or reduces the asset, that is called as capital receipts. And in capital receipts we have two type of receipts: debt receipts and we have non-debt receipts. We have debt receipts and we have non-debt receipts, right? Now, debt receipts which have the future obligation of the repayment. Non-debt receipts means which don't have the future obligations of the repayment, means which either reduces the asset but doesn't create the future obligation of the repayment. So if it is concerned, non-debt receipts doesn't create future repayment of the liabilities, that is correct. Okay, now market borrowings and securities, these are debt receipts. Yes, because these the government has to return. If the government is raising money from market borrowing or the government is raising money from the securities, these considered as a debt and the government has to repay it. So this is also correct. Why it is wrong? This is perfectly correct. Now first, recovery of loan and advances and disinvestment. These are debt capital receipts. No, these are non-debt capital receipts. These are non-debt capital receipts. Clear? So if we talk about the correct answer, second and third means B is the correct answer, everyone. Okay, done. Done, everyone. Can we move to the next question, guys? Any doubt? If you have any doubt in this question, you are free to ask your doubt, everyone. If you have any doubt in this question, you are allowed to ask your doubt. Any doubt? Prithvi, Sunil, Vinod, Ranveer, Shanti, no doubt. Can we move to the next question? Everyone, but kindly please like and share the video to the maximum you can. Everyone, whoever are watching this session, at least just please like and share the video to the maximum you can. Done? Good. Next question. Now tell me the correctly matched pair here. So we have given certain institution. IRDAI, Insurance Regulatory and Development Authority, NABARD, National Bank for Agriculture and Rural Development, SEBI, Securities and Exchange Board of India, SBI, State Bank of India. Now, intermediary institution, non-intermediary institution, regulatory institution, and intermediary institution. We have to choose the correct one. Which of the following is correctly classified here? So IRDI, this is intermediary, NABARD non-intermediary, SEBI regulatory, SBI intermediary. We have to choose which of the following is correctly matched here. Everyone, which of the following is correctly matched here? Please answer this question. So the correct answer is, everyone, we know this thing A, first, second, and third, these are correctly matched. And everyone else, kindly start answering the question, everyone. This is module C. This is module C. This is module C. Okay. Vinod, Sunil, Kamal, A, C, D. Okay. So Kamal, 2, 3, 4, right, correct. Only Kamal is correct here. See, IRDI, Insurance Regulatory and Development Authority of India, it is considered as the regulator of insurance market in India. So it is an intermediary institution? No, it is a regulatory institution. It is not an intermediary, it is a regulatory one. NABARD, non-intermediary, SEBI regulatory, SBI intermediary. Why SBI is considered as intermediary institution? Because it help in facilitating of the loan and advances, right? So if we talk about the correct answer, yes, D is the correct answer. Second, third, and fourth is the correct answer. Good, everyone. Important. Done? Done, you guys? Yes or no? Clear? Can we move to the next question? Good. Next question is what? Which of the following statement about the social infrastructure is misleading? Misleading means incorrect. Social infrastructure primarily refers to the physical facilities that support services like education, health, and housing. Investment in the social infrastructure can lead to the improved social outcomes such as reduced crime rates and better public health. Social infrastructure is only relevant in the urban areas as rural communities doesn't typically require such services. Enhancing social infrastructure often involves collaboration between government entities, non-profit organization and community group. We have to choose the correct answer. Everyone, we have to choose the misleading statement regarding the social infrastructure. We have to choose the misleading statement, everyone. So the correct answer is okay. Sunil is saying B. Investment in the social structure can lead to the social outcomes such as reduced crime rate and better public health. So what is wrong in the second statement? What is wrong in the second statement? Second is perfectly correct statement. There is nothing wrong in the second statement. Just look out simply just choose the misleading statement. So, social infrastructure primarily refers to the physical facilities that support services like education, healthcare, and housing. See, primarily refers to this is also considered as the misleading statement, but it is not totally incorrect. First of all, understand it. It can be considered as misleading. Why? Because if you are saying that social infrastructure primarily refers to the physical, it is one of the aspect social infrastructure. In social infrastructure, it is one of the aspect physical facilities that supports the education, healthcare, and housing. That is correct statement. There is not totally incorrect, but it is not totally correct also. Okay, so we cannot say A is the correct answer. Investment, that is correct. No, social infrastructure is only relevant in the urban areas. That is wrong. Social infrastructure is relevant to both urban and rural areas, both, because such services requirement, these are actually the requirement of both the communities, rural and urban. So social infrastructure is needed in both the areas, and that's why C is misleading. C is not the correct answer. Maximum few are correct here. Okay, next. General Insurance Company was set up in which year? Everyone. 1956, 72, 82, or 92? Very simple question related to the year. Everyone. General Insurance Company was set up in which year? Everyone start answering. And kindly please like and share the video to the maximum you can, everyone. General Insurance Company. Yes, if we talk about the General Insurance Company has been set up in 1970. So yes, B is the correct answer, right? General Insurance Company has been set up in 1972. Next, according to the recommendation of Narsimha Committee Phase 1 1991, the Indian banking structure should have how many tiers? According to the recommendation of Narsimha Committee Phase 1, Indian banking structure should have how many tiers? 2 tier, 3 tier, 4 tier, or 5 tier? Everyone, please answer. Now, again, it is very important. Again, it is very important, you guys. According to the recommendation of Narasimha Committee Phase 1, 1992, the Indian banking structure should have how many tiers? They have how many tiers? Okay. So K is saying B is the correct answer. Three tiers and everyone else. Narasimha Committee, Indian banking structure should have how many tiers? So, if we talk about the correct answer, according to the recommendation of Narasimha Committee Phase 1, Indian banking structure should have four tiers. Should have how many tier? Four tier. So, C is the correct answer, everyone. Not three, it is four tiers. Okay. So, C is the correct answer. Done? Clear, everyone? Good. Can we move to the next question? Everyone, can we move to the next question, everyone? It is fourth tier. It is a very important, you guys, very important question. Yes. Next question. Now, next question is consider the statement regarding the priority sector classification loans to the social infrastructure as per March 2025 guidelines. Bank loan up to 10 crore per borrower for setting up school, drinking water, and sanitation facilities are considered as the PSL classification. Bank loan up to 25 crore per borrower for building healthcare facilities in tier 2nd to tier 6 centers are eligible under the priority sector classification. We have to choose which of the following is the correct statement here. Now, again, very important, and I have told you the priority sector updated targets. I have told you the priority sector updated target, everyone. Please tell me the correct answer. So, the correct answer is what? Everyone start answering the question. So, the correct answer is what, everyone? No answer yet. No answer, everyone. Please start answering the question. No answer yet. Okay. So when we are talking about the correct answer here, bank loan up to 10 crore per borrower is considered as the priority sector lending classification. No, it is 8 crore. I have told you in the beginning of the session. I have told you in the beginning of the session. It is 8 crore. Now, bank loans up to 25 crore per borrower, it is considered for the tier 2nd to tier 6 cities. No, it is actually 12 crore per borrower. So, first is wrong and second is also wrong. If we talk about the correct answer, neither one nor two is the correct statement. Both the statements are wrong, everyone. Yes, both the statements are wrong. No statement is correct here, everyone. Done? Clear? Now, can we move to the next question, everyone? Can we move to the next question, everyone? Yes, next question. Consider the following statement regarding the Narsimha Committee Phase 2nd. Now, Narsimha Committee phase second has given you the different recommendation. We have to choose the correct statement regarding the Narsimha Committee phase second. The committee recommended the concept of narrow banking for strong and well-performing banks to enhance their liquidity management. It suggests raising the capital adequacy ratio to 9% to strengthen the banking system. It proposed the merger of strong banks to create a multiplier effect in the industry. We have to choose the correct statement. Sunil, read out the question carefully and then answer, okay? Don't answer in rush. Read out the question carefully and then you need to answer, each and every one of you. Kindly tell me the correct answer here. Kindly tell me the correct answer here, everyone. And everyone, please like and share the video to the maximum you can. Everyone, you guys, please like and share the video to the maximum you can. Consider the following statement regarding the Narsimha Committee's second 1998. Everyone, okay? First and second is the correct one. See, the committee has recommended the narrow banking concept for a strong and well-performing bank. No, this committee has recommended the narrow banking concept for the weak banks. It is not recommended for the strong banks for enhancing the performance and plus for risk-free management. The weak banks are recommended that you should follow the narrow banking concept, obviously. So, first is wrong. First is wrong. Now, second, it suggested raising the capital adequacy ratio to 9%. Correct. It proposed the merger of strong banks to create the multiplier effect in the economy. That is also correct. So, if we talk about the correct answer, second and third are the correct statement, and first is the wrong statement. Every second and third are the correct statement. First is the wrong statement. Done. Clear? Clear, you guys, everyone. Now, can we move to the next question? Yes or no? Kindly just please tell me, whoever are watching this session, kindly please just comment once. Done? Good. Next question. Which of the following was not a part of the steps taken towards liberalization in other sectors of Indian economy? All are very important. Which of the following was not the part of the steps taken towards liberalization in other sectors of Indian economy? First, import were delicensed and import duty were reduced. License Raj was abolished to promote industrial growth. Exchange rate was pegged tightly to the US dollar. FDIs were relaxed. We have to choose the correct answer here, everyone. Now again, it is easy question. We have to choose the correct answer here, everyone. Start answering, guys. Which of the following was not a part or not a steps towards the liberalization in other sectors of Indian economy? Everyone. Okay. Imports were delicensed and import duty were reduced. That is correct. This is liberalization. License Raj were abolished. Yes, liberalization. No, exchange rate were pegged tightly to the US dollar. No, exchange rates were actually flexible. The rates of exchange were actually flexible. They were free according to the demand and supply of the economy. So, obviously, C is not a part of liberalization. Fourth, FDI norms were relaxed. That is also correct. So, if we talk about the correct answer, C is the correct answer. Clear, everyone? Done? Done, everyone? Okay. Next question. Which of the following situations appear to violate the law of demand but actually does not when analyzed economically? Choose the correct answer. Okay, now just 2 minutes, let the azan complete, and then we will discuss this question. Meanwhile, start answering this question, everyone. Meanwhile, start answering this question. Okay, right. Done. So we have to see which of the following situations appear to violate the law of demand but actually does not when analyzed economically. Okay, let's see which of the following violates the law of demand. During the festival sale, a fall in the price of luxury watches leads to only a small increase in their demand. That is law of demand. Because fall in the price leads to increase in the demand, even a smaller increase or a larger increase. That depends upon the situation, but yes, it is the law of demand. This doesn't violate the law of demand. A fall in the price of inferior quality rice result in the consumer buying less of it and switching to the better quality of the rice. Yes, that is violating the law of demand. That is violating the law of demand. Why? Because in inferior good, if the income is decreasing, the demand is also increasing, and if the income is increasing, demand is also increasing. Plus, in the inferior good, it doesn't follow the law of demand. It means that if the price increase, the demand will also increase. If the price decrease, demand will also decrease. So if we talk about the inferior quality, the fall in the price of inferior good always refers or goes to the fall in the price of that, not to the increase. So it is violating the law of demand. So second is violating the law of demand, right? Third, when the price of petrol rise, consumer immediately reduce the consumption, start using the public transport. That is law of demand. As the price of the movie ticket decrease, more people decide to watch the theaters in movie. That is also law of demand. So it is the law of demand. It is the law of demand. It is the law of demand. But second, it is not the law of demand. So if we talk about the correct answer, D is the correct answer. Okay. D seems to violate the law of demand, but when it is economically analyzed, it actually doesn't violate the law of demand plus it has the income effect dominating the price and demand effect, right? So second is the correct answer. Clear, everyone? Okay, now which of the following statement is incorrect regarding the Udyami or regarding the MSME schemes in India? Incorrect statement. Udyami Mitra portal was actually launched to improve the accessibility of credit and hand holding services to MSME. MSME Samban help MSME register their cases of delayed payment against the government department. Digital MSME scheme promote the use of cloud computing of IT infrastructure access. Safruti focuses on organizing traditional industries into cluster and enhancing their marketability. We have to choose the correct answer. Incorrect statement, everyone. Incorrect statement, guys. We have to choose the incorrect statement here. Okay. So we know this saying B. At the same time, we're not saying D also. Now, which of the following is the correct statement here? Tell me the correct answer, guys. Udyami Mitra portal launched to give hand-holding supports to MSME. True. MSME Sambandh help MSME register their cases of delayed payment. That is false. That is wrong. Micro, small, and medium enterprises. Sambandh portal is actually for the public procurement of the products of MSME by public sector undertaking unit. Sambandh portal is for that. Whereas for the delayed payment, there is the delayed payment portal which has been launched by the government. Okay, so B is the incorrect statement. Digital MSA and Srufiti, these are all the initiative to promote the micro, small, and medium enterprises. Right? Yes, we know. D for the previous question. Yes. B for this question. Done? Clear? Can we move to the next question, you guys? Can we move to the next question, everyone? Okay, next question. Match the following. Now, overnight fund. This is an open debt fund investing in overnight securities having a maturity of 1 day. Liquid fund, open night scheme investing in money market having maturity of up to 1 year. Money market. It is having the maturity period up to 91 days. Match the following. Very easy question now. This is very easy. Tell me the correct answer. This is so easy question. Everyone, you guys, please answer. The correct answer is what? Overnight fund, liquid fund, money market fund. We have to choose the correct statement regarding this. Everyone, please answer. So the correct answer is what, everyone? Okay. So the correct answer is, first of all, overnight funds, these have a maturity period of up to 1 day. So first is A. Okay. Liquid fund, these has the maturity period of 91 days. Second is C. Money market fund, these has a maturity period of up to 1 year. So if we talk about the correct answer, first is A, second is C, and third is B. Yes, A is the correct answer. Yes, A is the correct answer, everyone. Done? Yes, A is the correct answer. Good. Next question. As per Reserve Bank of India guidelines of March 2025, loan up to what amount to startup qualifies at a micro, small and medium enterprises eligible for classification under priority sector lending. Now we have to choose for PSL updated targets of March 2025. Loan up to what amount to startups qualifies as MSME PSL lending? Everyone, 25 crore, 40 crore, 50 crore, or 75 crore. Everyone has answered this question. Everyone, please start answering this question. KGR is saying 50 crore C, and everyone else. And everyone else, please answer this question. Yes, that I have told you in the earlier thing, right? So if there is a loan which has been given to the startup that qualifies as a micro, small, and medium enterprises, so what amount is qualified as a priority sector lending target? So it is 50 crore per borrower. So the correct answer is what? C. C is the correct answer. Very good, important. Okay. Next question. Which category of the merchant banker handles issue management? Which category of the merchant banker handles issue management? Everyone. Which category of the merchant bankers handle issue management? Very easy. Very easy, everyone. Which category of the merchant banker can handle issue management? Category 1, category 2nd, category 3rd, or category 4th? Which of the following category of the merchant bankers can handle the issue management? Everyone start answering this question. So now you are saying category 3rd, C. And everyone else? Categories of the merchant banker can handle the issue management. Everyone, which categories of the merchant banker can handle the issue management? Yes, category A. Yes, category A is the correct answer. Obviously, category A is the correct answer. Done. Clear? Next question. Which of the following situations best indicate the recovery phase of the business cycle? Which of the following best indicates the recovery phase of the business cycle? Prices and profits fall continuously and unemployment rises. Consumer postponed consumption expecting further price fall. Bank begins lending at easier terms. Production and employment start increasing. Demand remains stagnant despite falling interest rate. Which of the following situations best indicates the recovery of the business cycle? Everyone, please answer this question. Recovery phase. The characteristic of the recovery phase. Which of the following best indicates the recovery phase? Everyone, please answer this question. We know the saying C is the correct answer, and everyone else, please answer this question, you guys. Everyone. And kindly, please like and share the video, everyone. Everyone, kindly just please like and share the video to the maximum you can. Okay. Recovery phase. Prices and profit falls continuously and unemployment rises. No, this is not the recovery phase. This is the depression phase. Consumer postponed consumption expecting further prices fall. Depression phase. Again, the depression phase. Bank begins lending at easier term. Production and employment start increasing. This is recovery phase. Demand remains stagnant. This is again the depression phase. Right, so A, B, and D, these are the depression phase, whereas C is considered as the what? Recovery phase. Clear? Next question. Now, a monetary policy committee has recently reduced the policy repo rate by 50 basis point. Okay. However, there is a senior official observed that despite this change, the lending rate offered by the banks have not fallen in the same proportion. As a policy analyst, you are tasked with identifying the possible reason behind this incomplete transmission of policy rate to the bank lending. So, which of the following factor is least responsible, least likely to responsible for the delay and diluted monetary policy transmission in this scenario? Administered interest rate and rigidity in the deposit repricing, asset quality concern in the banking system, increased exchange rate flexibility in the economy, or complete absence of the fiscal dominance in the country. Now, analyze the question. First of all, see what the question is saying, and then you have to answer. Everyone, please answer this question. Everyone. So, the correct answer is what? Least likely to responsible for the delayed and diluted monetary policy transmission in this scenario. Everyone, please answer this question. Everyone. Okay, so Nadeem is saying C. So the question is saying that the RBI has reduced the policy repo rate, but still that is not reflected in the bank lending rate. So, what is actually the reason for the delayed and diluted monetary policy transmission in the economy? What is the delayed reason? First, administrative interest rate and rigid in the depository pricing. So, this is actually the reason why the policies are delayed. This is actually the reason. So if you are talking about the least likely, A cannot be the answer, because if the administered interest rates or if this is semi-regulated, this actually delays in the transmission of the monetary policies to the public. And that's why A cannot be the answer. Asset quality concern in the banking system, sometimes if the monetary policy is reduced, but the bank is fear of the bad loans, okay, they don't want to take so much risk, so it actually delayed the transmission of monetary policies to the banking system, and that is also the reason. See, increase exchange rate flexibility in the economy. So basically these three are considered as the reasons why there is a delay in the monetary policy transmission in the economy, whereas complete absence of the fiscal dominance in the country, that is actually the least likely reason for the transmission of monetary policies in the economy. Why? Because see, when we are talking about, there is the um, uh, government dominance which is absent in the economy. Okay, so if there is no fiscal dominance, the central bank is free to transmit their policies independently to the economy. And when this uh, Reserve Bank of India is freely transmitting their economy's policy in the economy because the government is not interfering, this actually helps in transmission of monetary policies to the economy. So we have to choose which of the following is the least likely to be the reason, or you can say not the reason. Not the reason is D. D is not the reason for transmission or for the delay in the monetary policy transmission to the economy. Clear? Now, if you have any doubt here, please ask everyone. Any doubt? Any doubt, guys? Good. Next question now tell. In the Hick-Hansen model, suppose liquidity preference increases while thriftness in the economy decreases. Which of the following is the most likely immediate impact on the equilibrium rate, assuming money supply remains constant? Both IS and LM curve shift rightward, leading to the fall in the interest rate. IS curve shifts rightward while LM curve shifts leftward, leading to the rise in the interest rate. IS curve shift leftward while LM shift rightward, leading to the fall in the interest rate. Both IS and LM curve shifts towards leftward. Hick-Hazen model, you have to choose the correct statement here. Now tell me. Hick-Hazen model, you have to choose the correct statement here, everyone. Hick-Hazen model, you have to choose the correct statement here. What is the most likely the immediate impact on the equilibrium rate of interest, assuming money supply remains constant? So suppose liquidity preference is increasing. Higher liquidity preference leads to what? Everyone kindly start answering this question. A very good question. Very good question. Start answering this question, guys. Very good question, you guys, everyone. Okay. Liquidity preference. Liquidity preference means the desire to hold money in the form of cash. If liquidity preference is increasing, then obviously the demand for money is increasing. Okay, if you have the desire to hold more money in form of cash, your demand for money will be more. Okay, and when your demand for the money is more, the LM curve, liquidity preference money supply curve, it shifted to the left. Why it shifted to the left? Because of the rise in the interest rate. Because if there is a more demand for money in the economy, the bank increase their interest rates. If the bank is increasing their interest rate, people will in turn borrow less. Okay, and this will lead to the shift of liquidity preference money supply curve to the left, first of all. Okay, now next, when there is more consumption because the demand for money is more, liquidity preference is more, so there is a more consumption. More consumption means the investments is also high. There is a higher demand for investment. When there is a higher demand for investment, the investment saving curves shifts to the right, because higher income leads to the higher interest. Okay, higher income means you have more money in the bank account to lend. Okay, now if the bank has more money, then bank is lending high in the economy, right? So if we talk about the interest rate increases, in both the scenarios the interest rate will increase. In both the scenario the interest rates will become high. Okay, and so it once leads to the liquidity preference money supply curve shifting left, and is curve shifting towards the right. So if we talk about the correct answer, what is the correct answer for this? B is the correct answer for this. Clear? Done. IS curve shift rightward while LM curve shift leftward. And it both lead to the rise in the interest rate. Clear? Done. Now this I have explained in detail in the interest rate chapter. I have detailed explained it. Okay. Next question. Now, which organization is responsible for regulating the Atal Pension Yojana? Easy question. Now it is easy on you. Everyone, which organization is responsible for what? It is responsible for the Atal Pension Yojana. Everyone. Which of the following is responsible for the Atal Pension Yojana? Kindly please answer this question, guys. Which of the following is responsible for the Atal Pension Yojana? No, it's very easy. You can all answer this question, you guys. Yes. Atal Pension Yojana, it is Pension Fund Regulatory and Development Authority of India. Okay. Yes, B is the correct answer. Next. In India, a commercial paper is issued for the investment multiples up to what amount? Commercial paper is used for investment in multiples of up to what amount? 1 lakh, 2 lakh, 5 lakh, or 10 lakh. A commercial paper is issued for the investments multiple of up to what amount? Everyone, please answer. So the correct answer is what? Commercial papers. The minimum amount you can invest in the commercial paper is what? No, it's easy question. It's very easy. Commercial papers, these are the unsecured money market instruments which have a maturity period of less than 1 year. It is issued by the what? Commercial banks. Commercial papers, these are actually open for the investment, provided that the minimum amount you can invest is 5 lakh and in multiple of 5 lakh, means 5 lakh, 10 lakh, 15 lakhs, 20 lakh, 25 lakhs, right? So this is the commercial paper investments. Okay, done? Good. Next question. Next question is, which of the following accurately reflects the difference between the organized and unorganized sector? A large corporation employed a skilled worker with a formal contract and provide benefits like health insurance and paid leave. A local street vendor sells fruit without a license. A small family-owned business hire workers on a casual basis without written agreement but pays them regularly. A government agency oversees a construction project, ensuring all the workers are paid minimum wages and have the access to the safety gear. We have to tell me which of the following is the organized and the unorganized sector. Everyone. Organized and the unorganized sector. Everyone. Please answer this question. Benhar is saying B. Vinod is saying A. And everyone else. Which of the following is the organized and which of the following is the unorganized sector? Answer this question, you guys, everyone. Organized and the unorganized sector. Kindly answer this question. So if we talk about the correct answer, okay, okay. Now A, KGR is saying C, and everyone else. Where are everyone? Kamal, and where is Sunil, Vinod? Everyone, kindly please answer this question. Okay, first, a large corporation employed a skilled worker with a formal contract. It is the organized sector. A local street vendor sells fruit without a license. Unorganized sector. A small family-owned business hire workers on a casual basis. Unorganized sector. A government agency oversees a construction project, ensures that all worker gets their minimum wages. This is considered as the organized sector, everyone, because the government agency oversees that construction project. So A and D are organized. B and C unorganized. Yes, A is the correct answer. Everyone is correct here. A is the correct answer. Done? Clear? Next question. Which of the following best illustrate the concept of market interconnectedness? A rise in the oil prices lead to the increase in the transportation cost, which then raise the price of the goods in various retail market. A local bakery increase its prices because of the higher fuel cost, affecting only its immediate customer. A technology company releases a new smartphone model which has no effect on the sale or older model or other electronic devices. A sudden change in the consumer preference towards electric vehicle has no impact on the sale of traditional gasoline cars. We have to choose which of the following best illustrate the concept of market interconnectedness. Very easy. Market interconnectedness. So local bakeries affecting its immediate customer, not a market interconnectedness. A rise in the price lead to the increase in the transportation cost, which increase in the price of goods in the various retail market. That is market interconnectedness. So A is the correct answer. Yes, everyone, A is the correct answer. Next question. As per the SEBI revised investment regulations to improve liquidity in REIT, the minimum investment amount and trading lot size has been reduced to 50,000 and 2,000 unit respectively, 25,000 and 100 unit respectively, 15,000 and 1 unit respectively, and 10,000 to 10 units respectively. Tell me the correct answer, everyone. Tell me the correct answer. Tell me the correct answer, everyone. As per the SEBI revised investments regulation, To improve liquidity in REITs, the minimum investment amount and the trading size have been reduced to what? Important question, everyone. So the correct answer is what? Okay, so the correct answer is everyone start answering the question, everyone. If we talk about the correct answer, okay. So, as per the SEBI revised investment regulation to improve liquidity in REITs and the minimum investment amount and the trading lot size has been reduced to. So, the minimum investment amount is 15,000 and the trading lot size has been reduced to 1 unit. So, C is the correct answer, everyone. C is the correct answer, everyone. Again, an important question. C is the correct answer. Done. Next question. Under the priority sector lending norms, which of the following is classified as the lending to the weaker section? Individual women beneficiary up to 1 lakh per borrower, individual women beneficiary up to 2 lakh per borrower, up to 5 lakh per borrower, or without any limit. Priority sector lending to the weaker section, everyone. Priority sector lending to the weaker section as per the updated targets, updated version. Everyone, you have to tell me as per the updated version, March 2025, updated guidelines. March 2025, the updated guidelines. Everyone, according to that, you have to answer. Under the priority sector lending norm, loans up to which are classified as the weaker section. No, no, no. Please tell me the updated version. Okay. So if we talk about the correct answer, it is individual woman beneficiary up to 2 lakh per borrower. Earlier it is up to 1 lakh per borrower, but now the limit has been increased to 2 lakh per borrower. Yes, B is the correct answer. Next, which of the following sustainable development goals is especially focused on combating the climate change and its impacts? Very easy. It's very easy. Now tell me the correct answer. Very easy, very simple. Tell me the correct answer. Yes, Sustainable Development Goal 13, climate action. Okay, next. A mid-size insurance company, InsureCo, decide to transfer a significant portion of its risk to the reinsurer. As a result of this decision, which of the following statement is true? InsureCo has now no financial liability for the risk it transferred to the reinsurer. InsureCo can take on more policies without increasing its risk exposure. InsureCo must pay higher premium to reinsurer than it's collect from its policyholder. InsureCo business operation are negatively impacted by the reinsurance arrangement. We have to choose the correct statement regarding the reinsurance. Everyone, we have to choose the correct statement regarding the reinsurance. Everyone. Now tell me the correct statement. Everyone, you guys, please tell me the correct answer, everyone. You can all answer this question easily. You can all answer this question easily. Now you are all saying B. First of all, InsureCo has no financial liability for the risk is had transfer incorrect. While they have transferred the risk, they still have some financial liability towards their customer. So if you are saying A is incorrect. InsureCo can take on more policies without increasing its risk portion. That is correct. Because when you have transferred your risk to the reinsurer, now you can just manage your risk more effectively. And when you are managing your risk more effectively, then you can take on more policies without adding significantly to your risk profile. So B is the correct statement. B is the correct statement, everyone. Yes, B is the correct statement, everyone. Done. Next question. Consider the following statement related to the scholars and contribution on the wealth drain theory. Dadabhai Naoroji, R.C. Datta, C.N. Vekil were among the first Indian economists to quantify the wealth drain. Edmund Burke and Philip Francis were British thinkers who also classified and explained the mechanism of economic drain in India. Okay, and third, Philip Francis identified two main streams of the drain: remittance to the presidency town and private investment inflows. Okay, we have to choose the correct statement here, everyone. We have to choose the correct statement here. Thank you, Rajiv sir. Thank you. Everyone, just please answer this question. Everyone, just start answering the question, guys. Everyone. So tell me the correct answer here. Everyone, you guys tell me the correct answer. Wealth drain theory. We have to classify the correct statements regarding the wealth drain theory. Now, this is very easy. I have told you this in the class also. So you are saying A, first and second is the correct answer. Now, what is wrong in the third statement then? What is wrong in the third statement then? What is wrong in the third statement? Now, Philip Francis identified the drain theory. Two mainstream of drain theory? No, there are four mainstream of wealth drain theory. Four main streams, which included the investments, remittances, transfers, and the revenues from the private. Okay. So it was not only two, it was actually the four main streams of the wealth drain theory. Okay. So first is correct, second is correct. Okay. So these were the Indian scholars and these were the British thinkers about the economic drain in India. Third statement is actually wrong. There were no two mainstream. There were actually four mainstream. So if we talk about the correct answer, first and second only. So A is the correct answer. Done? Good. Next question. A venture capital fund is evaluating financing option for three different startups. Identify which of the following is the early stage financing or the later stage financing. So we have given three situations: first, second, and third. You have to identify which is the early stage and which is the later stage financing. Biotechnology startup is in the process of research and development for a new drug. A mobile app company has launched its product and now seeking fund to expand market operations. An e-commerce platform had achieved significant market share and is now raising fund to expand its infrastructure, increasing its product offering, etc. So what is the early stage and what is the later stage financing? Everyone. Early and later stage financing. Everyone, please answer this question. Identify which of the following is the early and which of the following is the later stage financing. Start answering the question, guys. Hmm. Now you are saying A, B. Kamal is saying K. Okay. So there is a biotechnology startup is in the process of research and development for a new drug and need initial funding to cover the cost of trials and patents. This is what? This is the early stage financing. Okay. A mobile company has launched its product and now seeking funding to expand operation, hire a larger team. This is a later stage financing. An e-commerce platform has achieved significant market share, is now raising fund to expand its infrastructure. It is again a later stage financing. So if we talk about the correct answer, early, later, later. So if we talk about the correct answer, A is the correct answer. Right? Yes, A is the correct answer, everyone. Done? Good. Next question. Which of the following statement about infrastructure is misleading? Hard infrastructure refers to the physical system necessary for the functioning of the society. Soft infrastructure include institutions and services that facilitate societal function as education, healthcare, and law enforcement. Investing in the infrastructure typically only leads to the short-term economic benefits. Both hard and soft infrastructure are essential for the sustainable development and contribute to improve the quality of life for communities. We have to choose the misleading statement here. Everyone, misleading statement about the infrastructure. Misleading statement. We have to choose the misleading statement, you guys. Harjinder is saying C. Haris, AGR, and everyone. Everyone, kindly please like and share the video to the maximum you can. Everyone, you guys, please like and share the video to the maximum you can. Okay. So, hard infrastructure, it is transportation, that is correct. Soft infrastructure, education, healthcare, law enforcement, that is also correct. Investing in infrastructure typically only leads to short term economic benefits, while little impact on long term growth, that is misleading. Obviously, C is misleading. C is misleading. C is the incorrect statement. Rest all are the correct statement. Good. Next question. We have to choose the correct statement here. Choices is created by the abundance of resources. Goods and services are produced at least cost and no resources are wasted. In mixed economy, all the decisions are taken by the central authority. Free market economy, the allocation of the resources is determined by the consumer preferences. When the supply curve moves to the left, it means the supply is increasing. We have to choose the correct statement. Very simple question. We have to choose the correct statement here, everyone. Choose out the correct statement here. Everyone, please answer this question. We have to choose the correct statement here, everyone. Kindly start answering this question, you guys. Start answering the question. And everyone, please like and share the video to the maximum you can. Sorry. Okay. Vishal is saying C. Second and four only. Horace is saying C. Okay, first, choices are created by the abundance of resources. No, we have the scarcity of the resources. Goods and services are produced as least cost and no resource are wasted. In fixed economy, if we talk about in mixed economy, all the decisions are taken by the central authority. No. In free market economy, the allocation of the resources is determined by the consumer preference. Yes. When supply curve move to the left, it means that the supply is increasing. No, it means that the supply is decreasing. Second and fourth only are the correct statements. So C is the correct answer. Yes, C is the correct answer. Good. Next question. Up to what extent foreign direct investment is permitted in the insurance sector? Very easy. FDI is permitted up to which sector or up to what percentage? 26, 49, 74, and 100%. What is the extent up to which FDI is generally permitted in the insurance sector? Everyone, please answer. So, yes, it is no, not 74, it is now 100%. Okay, earlier it was 74 and now it is 100%. Okay, so D is the correct answer. Good. Next. In an economy, these are the following components which are reported: currency with the public, demand deposit, other deposit, time deposit. So we have to calculate first of all narrow money in this economy. Second, if the government increases the currency by 100 million, what is the new broad money? Now just tell me the correct answer. Very simple. Easy question. Very simple and easy question. Calculate and answer, everyone. Calculate and then answer, everyone. In an economy, the following components are reported: currency with the public, demand deposit with the banking system, Other deposit with the RBI, time deposit with the banking system. Use the definition of narrow money and broad money and calculate. First of all, the narrow money, and second, you have to calculate the new broad money, everyone. Then you have to calculate the new broad money, everyone. Calculate, guys, everyone. It's so easy. It's very simple question. You just have to learn the formula of narrow money and broad money, and then you have to answer. Narrow money and broad money, and then you have to answer. Yes, Kamal is saying A. Triple X is also saying A. Correct answer is what? Now, first of all, we have to calculate the M1. Okay, so M1 is currency with the public, 750 plus demand deposit with the banking system, 500 plus other deposit, 300. Okay, and then the time deposit with the banking system. First of all, we have to calculate M1, currency with the public, plus the demand deposit, plus the other deposit, right? Now, we have to calculate the new one. Okay, so it is what, like 7? Yes, it is 1550. Good, right. Okay, now M3. M3 we have to calculate with the new. If the currency is increased by 100 million. So now the currency is 850 million. Okay, 850 plus 500 plus 300 and plus 600 also, because M3 we have to include the time deposit also. Yes, it is 2250. Correct answer is A. Right. Good. Yes, everyone. Good. Next. When the demand for the commodity decreases due to the change in the climate, then the demand curve will shift or move. This I have already explained in the last class also. The same question, this is a repeated question, so don't worry. Just please answer quickly. This is the repeated question. Quickly answer this question, everyone. This is the repeated question. Please answer, guys. When the demand for a commodity decreases due to change in the climate, then the demand curve will shift or move. Yes. Demand curve due to change in the climate. It will either go leftward or rightward, because upward and downward, this is actually when the price change. And the demand is decreasing. So obviously it is going leftward. Yes. Next question. In CRA, credit rating business, who primarily pay the rating fees to the credit rating agency? Who actually pays the rating fees to the credit rating agency? Investors, financial intermediaries, issuers of the financial instruments, or SEBI? In the credit rating agency, who primarily pays the rating fees to the credit rating agency? Everyone. Primarily pays the rating fees to the credit rating agencies. Everyone. Harjinder is saying B. K is saying B. Tell me the correct. Again, just read out the question, what I am asking, and then answer. Read out the question, what I am asking, and then answer. Everyone. You are all saying B, financially. Who are the financial intermediary who will pay the credit rating agency's fees? Why they are paying the credit rating agency's fees? No, they have no concerns with the CRA rating any company. The rating fee is actually provided by the issuer of the financial instruments. Whoever are the issuer of the financial instrument to which the CRA is providing the ratings, that will pay the rating fees. Now, of course, so C is the correct answer. It was very obvious. Only one person is correct, Ranveer. Else everyone is wrong here. Okay, done. Next question. If good has a negative income elasticity and a positive price elasticity of a demand, then it is a negative income elasticity and positive price elasticity given normal, superior, or inferior good. Negative income and positive price elasticity. Everyone, please answer this question, you guys. Everyone. Negative income and positive price elasticity. So the correct answer is yes. It is given goods. Given good, first of all, doesn't follow the law of demand. Okay, so it is having a positive price elasticity and it has the negative income elasticity. So obviously, A is the correct answer. Very good. Next. An individual named Alex decide to open the e-insurance account without having the insurance policy. After a month, Alex buy new insurance policy and want to demat it. What must Alex do to complete this process, and is there is a fee associated with maintaining the insurance account during this period? Alex must contact the insurer or insurance repository to request dematerialization, and there is a monthly fee for the insurance account. Alex must contract the insurer or insurance repository to request demat, and the insurance account is free of cost. Alex can automatically dematerialize the policy without any request, and there is a one-time setup fee for the insurance account. Alex cannot demat the policy since the insurance account is only for the active policy holder. Very easy question. Everyone, please start answering this question. Everyone, please. Oh, sorry. Start answering this question. Very simple, very easy. Everyone. E-insurance account. It's very simple. Already I have explained to you the insurance account. Already I have given you a good explanation of the insurance account. Everyone start answering the question. Everyone. Okay. First of all, insurance account is free of cost. Yes. Second, insurance account for converting your insurance policy to demat, you have to request it. So obviously B is the correct answer, not C. Only Nadeem is correct here. You must contact the insurer or insurance repository to request dematerialization, and the e-insurance account is free of cost. B is the correct answer. Yes, the e-insurance account is completely free of cost. There is no setup fee, there is no monthly fee, there is no annual fee, nothing. B is the correct answer. Okay. Done. Clear. Next question. Which of the following correctly illustrates the difference between normative and positive economics? A report states that increasing the minimum wage, which leads to the higher unemployment rates among the teenager. A politician claimed that rising the minimum wage is essential for ensuring the living wage for all the workers, and economics predict that reducing rate with stimulates the economic growth. A company group argues that healthcare should be free of cost for all because it is a basic human right. We have to choose which is a positive economics and which is a normative economics. Positive and a normative economics, everyone. Which is a positive economics and which is the normative economics, everyone. Everyone. Positive and normative economics. Everyone, please answer. Which of the following is a positive economics and which of the following is a normative economics? I switched off the camera so that you can see all the questions. Everyone, please answer. Now, what is a positive economics and what is a normative economics? See, positive economics means when it is telling about any facts. Positive economics means when it is telling about any facts. Negative economics means when you are trying to suggest any measures. That is the negative economics or normative economics. Okay. Positive or normative economics? Now you have to choose the correct statement here. Now you have to choose the correct statement here, everyone. Now you have to choose the correct statement here. Everyone, please answer. Okay, now XX is saying A is the correct answer. First, a report says that increasing the minimum wage which leads to the higher unemployment among the teenagers. Yes. So this is what this is actually telling about the facts. This is what telling about the facts. So this is a positive economics. Now, a politician claims that rising the minimum wage is essential for ensuring a living wage. Now, this is actually recommending you some policy, normative economics. And economist policies predict that reducing rate with stimulates economic growth. Now, this is again positive one. Now, a committee argues that healthcare should be free of cost, giving the recommendation. So, normative economics. Okay, so if we talk about the correct answer, A and D, sorry, B and D normative, A and C are positive. Yes, A is the correct answer. One, yes, A is the correct answer, everyone. Yes. Done. Clear, everyone? Any doubt? Can we move to the next question? Everyone, kindly just please like and share the video to the maximum you can. Everyone, please like and share the video to the maximum you can. Okay, next question. An investor is evaluating whether to invest in the equity market or government bonds. The current 10-year bond yield is 7% per annum. Investor believe that equities should provide at least a 5% risk minimum over risk-free asset like bonds to justify the higher risk involved in the equity investment. Based on this, at which minimum expected return should the investor considered investing in equities? Tell me the correct answer. Everyone. Now tell me the correct answer here. An investor is evaluating whether to invest in the equity market or government bonds. The current is 7% per annum. Investors believe that equity should provide at least 5% risk premium to justify the higher risk involved in the equity investment. So, based on this, what is the minimum expected return should the investor considered investing in equities? Very simple question. Yes, it is D. See, because if you are going safe, if you are going safe with the government investments, bond investment, you are receiving a risk-free income of 7% per annum, right? But again, if you are providing any of the extra, means you are going in the risky investments like equities, you are saying that at least 5% extra I will earn from that particular risk. So 7% plus 5% extra. So the minimum expected return is 12% for that particular investor if that investor want to invest in the equities. So yes, 12% is the correct answer. Done? Good. Now, based on the process of venture capital financing, arrange the following in the correct chronological order. After this, we are taking a break and then we will continue the rest of the question. Okay. Now, based on the process of venture capital financing, you have to select the correct chronological order in the cases: deal, negotiation, screening, evaluation, deal origination, exit plan, post investment activities. Everyone, please answer this question. Correct chronological order? Everyone, please answer this question. It's very easy. You have to just select the correct chronological order. You just have to select the correct chronological order. Everyone, correct chronological order, everyone, please answer. So Haris is also saying A, Kamal is saying A, and everyone else, please answer the question, everyone. So the correct answer is what? Okay. So first is what? First of all, the deal origination is done, right? Second, screening is done. Third, we have to evaluate. Fourth, we have to negotiate the deal. Then fifth, we have to do the post investment activity. And then last, we have to do the exit plan. So deal origination means four. Then screening, then evaluation, then deal origination, then there is a post investment activity, and then there is an exit plan. 423165. 423165. A is the correct answer. Yes, 423165. A is the correct answer, everyone. Done? Clear? We have to choose the correct statement here. Equity shareholders do not have the voting right, while preference shareholders have the voting right. Equity shareholder have the right to participate in the management decision, while preference shareholder don't have this right. Everyone, we have to choose the correct statement here. The correct statement regarding the difference between equity shareholder and preference shareholder. Just tell me the correct answer, everyone. Everyone start answering the question. Everyone, you guys, please answer this question. So equity shareholder do not have any voting right. False. Equity shareholder have the voting right, while preference shareholder don't have the voting right. Equity shareholders have the right to participate in the management. That is correct. So yes, B is the correct answer. Only second is the correct statement. Next question. Which of the following statement is misleading about the credit rating and the credit score? We have to choose the misleading statement. Credit scores are exclusively given for individual borrowers, while ratings are applies to both individual and corporations. Higher credit score always guarantees you a better interest rate. Credit rating access long-term credit worthiness, while credit score are often focus on short-term financial behavior. Both credit rating and score are calculated using algorithms based on the historical financial backgrounds. Everyone, you have to answer. Everyone, kindly start answering this question, guys. Credit scores. Everyone, start answering this question. Okay, so if we talk about the correct answer, first of all, credit ratings scores are exclusively for borrowers and ratings are individual as well as the corporation. That is correct. Because ratings can be given to high net worth individuals. Okay, so it applies to both, obviously, that is correct. A high credit scores always guaranteed a better interest rate. That is actually false. A high credit score, if you are saying that it guarantees a better interest rate on loan, that is wrong. So B is the correct answer. Okay, next question. Which of the following statement is incorrect regarding difference? So this already we have discussed. Next question. As per the SEBI guidelines, an infrastructure investment trust must ensure that at least what percentage of its asset are generating operational income? 50, 60, 75, or 80%? Answer this question. As per the SEBI guidelines, InvITs, Infrastructure Investment Trust, must ensure that at least what percentage of its asset are generating operational income. Everyone start answering this question. At least what percentage of its asset are generating operational income? So it is for both InvITs and REITs. This is that at least 80% of their assets should be invested in the operational income generating asset. Okay. And there is second important thing is at least 90% of the income which is generated should be distributed as dividend among the shareholders, right? So if we talk about the correct answer, D is the correct answer, 80%. Very good, Harris. Good. Yes, right? Next question. A company entered into 3 into 6 FRA. Okay, see this 3 into 6 FRA. Okay, to borrow 10 crores after 3 months for a period of 3 months. Okay, FRA fixed rate is 6% per annum. After settlement, means at settlement after 3 months, the actual 3 month market rate is 7%. Now, what will happen at settlement? The company will receive the difference from the FRA seller. The company will pay the difference to the FRA seller. The company will neither pay nor receive anything. The contract will be extended automatically for 3 more months. Now, you can answer this question, everyone. It's easy. It's easy. You can all answer this question, guys. Start answering this question. Everyone. Hmm. Everyone, please start answering this question. So very easy, very simple question. You can all answer this question. Navya is saying A. Kamal is saying B. Kamal, everyone. 3 into 6 FRA. Now again, it is a very good question. 3 into 6 FRA means it is bought for a period of 3 months, 3 months from now. Okay, it is bought for a period of 3 months, 3 months from now. FRA interest rate is actually fixed at 6%, and at the time of settlement, it was raised to 7%. So obviously, the FRA buyer is at profit because the market interest rate actually increased. Okay, and this actually give you the protection because you already have fixed the interest rate at 6%. So the balance will be compensated to you by the seller. So the company will receive the difference from the FRA seller because FRA seller need to compensate you for that 1% because you have fixed it at 6% at the beginning only. And that is what the FRA means. So A is the correct answer. Very good. Very good, Navya. Next. Consider the following statement regarding the wealth drain during the British rule in India. The term home charges refers to as the official transfer made by the colonial government to Britain during British rule. These charges include expenses such as pension of the retired British officer, guaranteed interest to the railway companies, and salaries to the Secretary of State of India. The wealth drain was balanced by the Britain economic investment and trade returns to India. Which of the following statement is or are correct? Everyone. Which of the think is or are correct here? Everyone, start answering this question. Wealth drain theory. Everyone, you have to answer this question. The wealth drain theory. The wealth drain theory. The concept of wealth drain. Everyone, please start answering. The concept of wealth drain. Everyone. So the correct answer is Nabia saying A, Naresh is saying A, and everyone else just start answering the question. Okay. The term home charges, that is correct. These charges include expenses such as pensions of the retired budget officers, guaranteed interest, that is also correct. The wealth drain was balanced by the Britain's economic investment. No, the wealth drain is a unilateral transfer of wealth. It is not a balance. It is only one-sided from India to Britain, not from Britain to India. It is only from India to Britain. So obviously the correct answer is first and second only. So A is the correct answer, everyone. Done? Yes, A is the correct answer, everyone. Done. Next question. In a country, GDP is this. The total insurance premium from insurance companies 45,000 crore. 60% is from life insurance, 40% is from non-life insurance. We have to calculate the insurance penetration here. We have to calculate the insurance penetration here, everyone. Insurance penetration here, everyone. Please answer this question. We have to calculate the insurance penetration here. Everyone, please start answering this question. It's easy. Life insurance penetration we have to calculate. Specifically, the question is asking the life insurance penetration. Specifically, the question is asking the life insurance penetration, everyone. Okay. So 45,000. Out of this 45,000, 60% is life insurance. Okay. So life insurance premium is what? 27,000. Okay. And we have to calculate the life insurance penetration. Life insurance penetration is equals to insurance premium means 27,000 divided by GDP 12 lakh 50,000. And because it is given in percentage to into 100, just solve this and answer. Everyone, just solve this and answer. So what is the correct answer, everyone? Just solve this and answer. Hmm. Okay, I think the answer is not coming correctly here. It is 2.16 which is coming. The answer is 2.16 which is coming. No, answer is 2.16, right? So I think the options are wrong. How A is coming? 0.36 is coming. Akka, 27,000. Let me just check. 27,000 divided by. No, it's 2.16 which is the answer which is coming here. Okay, done? Yes, it's 2.16 which the answer is coming here, everyone. Done, done, done. Okay. Next question. In India, CRA are regulated by, credit rating agencies are regulated by SEBI, RBI, both A and B, or none of the above. Everyone, please answer this question. This is very easy now. So tell me the correct answer. In India, CRA are regulated by, it's very easy. Credit rating agencies. Now this can, oh, very easy answer. Yes, it is regulated by SEBI, Securities and Exchange Board of India, obviously. Haris and Navya and Naresh and everyone. No, no, no. Credit rating agencies, these are regulated by SEBI, Securities and Exchange Board of India. Next question. A venture capital fund is analyzing three different companies for potential investments. Based on the brief scenario, identify the most appropriate type of financing for each company required. Now, Company A is a profitable FMNC brand, has established a strong share, is looking to a second production facility to meet the rising demand. Company B is currently in loss but was supported by the same venture capital fund in its early stage. Now, it has recently undergone major changes in its product line. Company C is stable and growing, but one of the early angel investors want to exit. The company is now looking to go public anytime soon. Okay, not going. Okay, the venture capital fund sees a strong potential over the few years and is willing to buy the existing shareholder stake. We have to choose which of the following is correct here, everyone. We have to choose which of the following is correct here. Everyone, please answer. We have to choose which of the following is correct here, everyone. So Haris Singh saying B, Double X is saying B, and everyone else. Kindly please like and share the video, guys. Whoever are watching this session, please like and share the video to the maximum you can. Everyone, just please like and share the video to the maximum you can. Okay, so simple. First is for expanding. So yes, it is an expansion finance. First is for expanding, so it is an expansion finance. Second, at the time of the loss, the funding is provided. So it is called as turnaround financing. Okay, and when there are the new venture capitalists who are actually buying out the existing shareholder stake, that is called as replacement financing, right? So expansion, turnaround, and replacement. B is the correct answer, everyone. B is the correct answer. Done? Yes, B is the correct answer, everyone, you guys. Done? Next question. Choose the incorrect statement here. The mutual fund industry in India started in 1963 with the formation of UTI at the initiative of SEBI. Mutual fund is a mechanism for pooling resources from the public by issuing units to them and investing the funds so collected in securities in accordance with the objective as disclosed in the offer document. Investors of the mutual fund are called as the unit holder. A mutual fund is required to be registered with SEBI, which regulates the securities market before it can collect fund from the public. We have to choose the incorrect statement here. Now we have to choose the incorrect statement, guys. Incorrect. Okay. Please answer this question. We have to choose the incorrect statement here, everyone. Incorrect statement. Incorrect statement, everyone. Choose the correct answer here. We have to choose the incorrect statement, everyone. So the correct answer is okay. So the mutual fund industry in India started in 1963 with promotion of UTI, Unit Trust of India, at the initiative of SEBI. No, no. It is actually with the formation of UTI at the initiative of RBI and Government of India. Year is correct. Okay, so this is incorrect. Now, second is correct, third is correct, fourth is correct. So, one only is the incorrect statement. We have to choose the incorrect statement, right? One only. Next, under the priority sector lending norms, what is the maximum loan limit for renewable energy project to qualify as a PSL classification? You have to tell me as per March 2025 guidelines, everyone. Priority sector lending norms. What is the maximum loan limit for the renewable energy projects to qualify as the priority sector lending classification? Everyone. Everyone start answering this question. Kamal is saying V and everyone else. Priority sector lending norms. What is the maximum loan limit for the renewable energy projects to classify as the PSL classification, priority sector lending classification? Yes, 35 crore per borrower and 10 lakh for the individual household. Important question because it is updated one. So obviously it is important. Next question. Which of the following mutual fund statement is misleading? We have to choose the misleading statement. Mutual fund offers investors diversification by pooling money from many investors to purchase a variety of securities. The net asset value of the mutual fund is determined by the fund's total asset minus its liabilities divided by the number of outstanding shares. All the mutual funds are actively managed, means the fund manager makes decision to buy and sell securities in an attempt to outperform the market. Mutual fund has different share classes which may vary in fees and expenses ratio affecting the investor return. Misleading investment. We have to choose the misleading investment, everyone. Misleading. We have to choose the misleading statement regarding the mutual fund. Misleading statement, everyone. Start answering this question, guys. Misleading. Misleading. If you are saying that all the mutual funds are actively managed, no, there are passively managed mutual fund also. So mutual fund can be passively managed also and actively managed also. So if we talk about the incorrect statement, C is the incorrect answer because C is saying that all the mutual funds are actively managed. No, mutual fund, sorry, mutual fund, sorry, just a second, huh? Give me 1 minute. Okay, so if you are saying that all the mutual funds are actively managed, false. The mutual funds, these are actively managed also and passively managed also. So obviously C is the correct answer. Done? Clear? Next question. Under the CRA, Credit Rating Agencies Regulation, which of the following statement is incorrect regarding the CRA? A CRA must have a minimum net worth of 5 crore and educate infrastructure to issue ratings. Person promoting the CRA must have the period experience and a net worth exceeding 100 crore. A registration of CRA is granted if the applicant meets capital and infrastructure norm irrespective of the investor interest. CRA can be promoted by the financial institution or person with the relevant experience. Please answer this question. We have to choose the incorrect statement, guys. Incorrect statement here. We have to choose the incorrect statement here. Everyone start answering. We have to choose the incorrect statement. Navya, Haris, Kamal, and everyone start answering this question. We have to choose the incorrect statement. A CRA must have a minimum net worth of 5 crore. Correct. Person promoting CRA must have a minimum net worth of 100 crore. Correct. Registration of CRA is granted if the applicant meets capital and infrastructure norm. Incorrect. Registration is not granted automatically. You have to apply it, right? CRA can be promoted by financial institution and the person with relevant experience. That is correct. So if we talk about the incorrect answer, C. Okay. Next, we have to choose the incorrect statement. Life insurance protect the individual from a financial consequences of the premature death, and pension product address the risk of living too long so that one's resources are adequate to support one's standard of living during the old stage. Vesting stage, when one pays a specific amount regularly until the person's retirement. Accumulation stage, once the individual retire, he will get a steady flow of income for the rest of the life. We have to choose the incorrect statement here. Incorrect statement, everyone. Choose the incorrect statement. So the correct answer is what? We have to choose the incorrect statement, everyone. Please answer. Incorrect statement, everyone. C, 2 and 3. Life insurance, the definition is correct. Now, vesting state, when a person pays a specific amount regularly until the person's retirement. No, that is accumulation stage. It is called as accumulation stage, and this is called as the vesting stage. Okay, so if we talk about the incorrect statement, second and third are the incorrect statement. Next question. A multinational company is considering three different strategies to expand its operation into new country. A company planned to build a brand new manufacturing facility from the ground up. A company intend to purchase an existing purchasing plant that is currently underutilized. Now, a company decides to partner with a local firm, co-invest in a new project, sharing the resources, expertise, and profit. Now, we have to choose the correct strategy for each situation. We have to choose the correct strategy for each situation. Tell me the correct answer, everyone. Correct strategy. Okay. So from the ground up, yes, it is a green field. From the ground up, yes, it is the green field. If you buy the existing one, it is considered as the brown field. Yes, if you buy the existing one. And third, yes, it is called as the joint venture. So if we talk about the correct answer, yes, A is the correct answer, everyone. Done. Clear? Next question. Which of the following is the first Indian company and the first bank or the financial institution from non-Japan Asia to be listed on New York Stock Exchange? Which of the following is the first Indian company and the first bank or institution from non-Japan Asia to be listed on a New York Stock Exchange? We have four options. Tell me the correct answer, everyone. Just tell me the correct answer, everyone. First Indian company and the first bank or the financial institution from the non-Japan Asia to be listed on the New York Stock Exchange. Tell me the correct answer. No, it is ICICI Industrial Credit and Investment Corporation of India. It is the first universal bank also. First universal bank also. Okay, and it was the first Indian company from the non-Japan Asia to be listed on the New York Stock Exchange. Right, next question. As per the recommendation of NC Singh Committee on FRBM, the combined debt to GDP ratio shouldn't be exceeding what? Now, everyone, the combined debt to GDP ratio shouldn't be exceeding what? Everyone. Everyone, please answer this question. Non-Japan Asia means non-Japan Asia. Non-Japan Asia, what I can explain about non-Japan Asia? All the other countries except Japan, right? It is non-Japan Asia. Because from Japan, it is already the companies which has been listed in the New York Stock Exchange. ICICI is the first company from the non-Japan Asia to be listed in the New York Stock Exchange. Okay. Now tell me the correct answer. Encasing Committee on the FRBM, Fiscal Responsibility and the Budget Management Act. The combined ratio shouldn't be exceeding what? Everyone. The combined ratio shouldn't be exceeding what? Everyone. Very important. It is important question. Okay. So it shouldn't be exceeding 60%. Center 40 and state 20. And it is the Encasing Committee's recommendation of Fiscal Responsibility and Budget Management Act. No, B is the correct answer. B is the correct answer. Okay. Done. B is the correct answer. Done. Okay, next question. Identify which type of financial integration is reflected in the following situation. Okay, a commercial bank in India offers both a deposit and loan product, and the interest rate on the deposits and loan move closely around a common benchmark rate. The government of India removes capital control to allow foreign investors to freely invest in the Indian equity and bond market and harmonize regulation with global financial standards. India collaborates with neighboring Asian countries under the Asian Clearing Union to facilitate regional trade payments and settlement in local currencies. Just tell me the correct answer, everyone. Just tell me the correct answer, everyone. Tell me the correct answer, everyone. Start answering the question, guys. Okay, so a commercial bank in India offers both deposit and loan product. Yes, it is the domestic integration. It is what? Domestic. The government of India removes capital control to allow foreign investors to freely invest in Indian equity and bond market. Yes, this is what? Hmm. Yes, it is a global integration. Asian Clearing Union, it is a regional integration. So if we talk about the correct answer, A is the correct answer. Done, everyone? Yes. Next question. The various function of ICICI are provide finance in form of short-term and medium-term loan and equity participation, sponsoring and underwriting new issues of shares and other securities, guaranteeing loan availed by the entreprises or enterprises from other lenders. We have to choose the correct statement here, everyone. We have to choose the correct statement here, guys. Everyone, please start answering the question. We have to choose the correct statement here, everyone. Everyone, start answering the question, guys. So the correct answer is what? The various function of ICICI, Industrial Credit and Investment Corporation of India. So it provides the finance in terms of short term and medium term loan. No, it provides finance in terms of medium to long term loans. So first is wrong. Sponsoring and underwriting, yes. Guaranteeing loan, yes. Second and third. So B is the correct answer. Good. Next question. Which of the following would be the least likely to be the priority for Niti Aayog? Least likely means not a function of Niti Aayog. Simple. You have to tell me which of the following is not a function of Niti Aayog. Creating framework for sustainable development, monitoring the effectiveness of existing program and providing real-time adjustment and innovation to improve outcome, oversees the implementation of immediate short-term financial bailouts to current economic challenges, encourage collaborating network for knowledge sharing among nationals and international experts to foster innovation and entrepreneurship. Which of the following is correct here? Everyone, please start answering. Which of the following is correct here? Not a strategy, you can say. Least priority, you can say. So we have to tell the correct answer, everyone. Sorry. Least likely. Okay. So creating framework for sustainable development, monitoring the effectiveness of existing program, overseeing the implementation of immediate short-term financial bailouts. No. Niti Aayog is actually having a long-term developmental goals, not short-term. It has the policy time period from for which can range from 10 to 15 years. Okay, and that's why Niti Aayog has replaced the 5-year plans. Okay, so it is not focusing on any short-term financial bailouts. The focus is on long-term, right? So C is the correct answer. Done. Next question. Which of the following goals is covered under the Sustainable Development Goals? Sustainable Developmental Goals, very easy. Sustainable Development Goals, very easy. It's easy. You can all answer this question. Sustainable Development Goals. Yes, no poverty, zero hunger, good health and well-being, quality education. All of the above are considered as the sustainable development goals. All of the above are considered as the sustainable development goals. Yes, done. Hmm. Next question. The General Insurance Company was established as a result of merger of four public sector life insurance company, formation of Life Insurance Corporation of India, privatization of insurance sector in India, nationalization of 55 private general insurance companies. Everyone. The General Insurance Company. Everyone start answering. The General Insurance Companies. The general insurance companies. Everyone, start answering this question. The general insurance company has been established by what? It is a result of what? General insurance companies. It is a result of what? GIC. Yes, it is the result of 55 private general insurance companies. So D is the correct answer. It is the result of 55 private general insurance companies nationalization, the general insurance company. Okay. Next, which of the following has or have occurred in India after the liberalization of economic policies in 1991? Share of agriculture in GDP has increased enormously. Share of India's export in the world trade increase. FDI inflows increase. India's foreign exchange reserve increased enormously. We have to tell me what has occurred after the liberalization of economic policies. Liberalization of economic policies, everyone. Liberalization of economic policies. So liberalization, share of agriculture sectors has increased enormously. No. Share of India's export increase, yes. Foreign FDI's inflows increase, yes. India's foreign exchange reserve increase, yes. So second, third, and fourth is the correct answer. Next question. ESG practice in India mainly focuses on improving financial returns with a little regard for a broader ethical or social impact of the operations. Bank in India are increasingly incorporating ESG by disclosing diversity, human right practice, and support for LGBT equality. Corporate governance in bank ensures that the decisions are solely in the interest of maximizing shareholder return without consideration of the long-term social impact. We have to choose the incorrect statement. We have to choose, I think, the correct statements. Okay, just a second. Okay, we have to choose the correct statement here. Everyone, just choose the correct statement here. Just choose the correct statement here, everyone. Guys, please answer this question. Just choose the correct statement here. Everyone, start answering this question. Choose the correct statement here. Everyone. So, ESG practice in India mainly focuses on improving the financial return. Obviously, not. It is not focusing on increasing the financial returns. No. Economical or ESG, okay, environmental, social, and governance, these are not on the financial returns maximizing, okay. It has different thing. We have to focus on environmental, social, and governance in our policies. So first is wrong. Bank is increasingly incorporating, yes. Corporate banks in India ensures that the decision are solely made in the interest of maximizing the shareholder profit. No. So we have to choose the correct answer. Only second. C is the correct answer. Everyone, C is the correct answer. Done. C is the correct answer. Yes, everyone, C is the correct answer. Any doubt? The next question. Choose the correct statement. Green bonds are issued by any sovereign entity, intergovernmental groups, and corporation with the aim that proceeds of the bonds are utilized for environmentally classified product. India started issuing green bonds in 2015, and most of the green bond issued since 2015 has a maturity of 5 years or above, but less than 10 years. Tell me the correct answer. We have to choose the correct statement. We have to choose the correct statement, everyone. Answer. We have to choose the correct statement here. Only second. Now we are saying only second is the correct answer, and everyone else. We have to choose the correct statement, guys. B. Kamal is also saying only second. Why first and third? Why these are wrong? All the statements are correct. C is the correct answer. There is nothing wrong in any of these statements. Everyone, all the statements are correct. Yes, KGR. All the statements are correct. Obviously, C is the correct answer. Next question. A company entered into 3 into 6 FRA to hedge against a possible rise in the interest rate. Which of the following statement correctly describe this contract? Everyone. The company will borrow after 3 months for a period of 3 months. The company will borrow immediately for a period of 6 months. The company will lend after 6 months for a period of 3 months. The company will borrow after 6 months for a period of 6 months. 3 into 6 FRA. What is 3 into 6 FRA? Everyone, forward rate agreement. 3 into 6 FRA. Please answer. Now we are saying A, and everyone else? Yes. 3 into 6 is for a period of 3 months, 3 months from now. Yes, A is the correct answer. Next question. The eligibility for a tri-party agent. Okay, that we have already done. Next, IDBI has been established as a wholly owned subsidiary of what? IDBI, Industrial Development Bank of India, has been established in 1964 as a wholly owned subsidiary of what? Everyone. Wholly owned subsidiary of what? Everyone, please answer this question. Wholly owned subsidiary of what? Now it's easy. Yes? No, no. Now it has been under the ownership of central government. Now. But earlier, when it was established as a wholly owned subsidiary of Reserve Bank of India, Industrial Development Bank of India. Later, the ownership has been transferred to the central government. Okay. Next question. In 1976, IDPI introduced the soft loan scheme to provide financial assistance to the product unit in which of the following selected industries? Cement, cotton, textile, jute, sugar, or certain engineering industries. Which of the following is the correct answer here? Everyone. Which of the following is the correct answer here? Everyone, kindly please like and share the video, guys. Whoever are watching this session, please like and share the video to the maximum you can. Yes, it is all of the above. Yes, D is the correct answer. All of the above. It is has been introduced in every field. Okay. Now choose the correct statement. Export Import Bank of India was established in 1981. The Act has been passed in 1981 and commenced operation in 1982. The bank is a wholly owned subsidiary by RBI and was set up for the purpose of financing, facilitating, and promoting foreign trade. The bank provides 360-degree support to the export-oriented unit by catering to the long-term loan requirement that helps exporter finance new projects, etc. We have to choose the correct statement here. Everyone, just choose out the correct statement regarding the Export-Import Bank of India. Everyone. Export-Import Bank. The correct statement regarding the Export-Import Bank of India. Everyone. We have to choose the correct statement regarding the Export Import Bank of India. Everyone, please answer. Okay. So the Export Import Bank was established in term of Export Import Bank of India Act 1981 True. Commenced in operation in 1982. Done. The bank is a wholly owned by RBI. No, it is completely owned by Government of India. So it is wrong. The bank provides 360-degree support to the export oriented unit. That is also correct. First and third are correct. Second is wrong. C is the correct answer, everyone. C is the correct answer, guys. C is the correct answer, everyone. Done. Next question. What is the role of DFI? Who actually, which of the following DFI has a role in counseling NRIs for the investment in India? Which of the following development financial institution has a role of counseling the non-residential Indians for their investments in India? IFCI, IDBI, ICICI, or Exim Bank? Everyone, please answer. No, it is ICICI, Industrial Credit and Investment Corporation of India. C is the correct answer. Next, with the onset of liberalization, what structure has been adopted by DFIs, Development Financial Institution? With the onset of liberalization, what structure has been adopted by Development Financial Institution? What structure has been adopted by the Development Financial Institution? Very simple. So the correct answer is what? Hmm. So yes, it is the Universal Bank, on which committee has recommended this? Narasimha Committee. By the recommendation of Narasimha Committee, these changes has been adopted. Okay. Next, you have to match the following with the correct solution. Okay. Suitable for one of large value international deals, involve MIS collection and administration services commonly used for short term receivables backed by letter of credit or evilised bill of exchange. For these 4 points, you have to choose which of the following is good, factoring or forfeiting. Everyone, please answer. Match the following. We have to answer this question, everyone. So tell me the correct answer, everyone. So, suitable for one of large value international deals, forfeiting, because forfeiting is for large value transaction plus for international. Involve MIS collection and administration services, it is factoring. Commonly used for short term receivables, factoring. And backed by the LCs, it is forfeiting. Okay. So one is what? One is B, second is A, third is A, fourth is B. Okay, yes, so this A is the correct answer, everyone. Good. No, A is the correct answer. Right. Next, business cycle is also known as, very easy. We are almost finishing the class, everyone. Business cycle is also known as what? So business cycle is also known as economic cycle. Now let's do this last question. Which business cycle is also called as economical crisis? Which business cycle is also called as what? Crisis, everyone. Which business cycle is called as crisis? Everyone, please answer. This is the last question. Crisis. No, no, no. Crisis, which is called as the crisis. It is a recession, which is also called as the crisis. It is recession, which is also called as the crisis. Done.